Good afternoon, everyone. Welcome to the Philadelphia Public Bank Summit. Happy to see so many of you all here today on this call. So my name is Steve Paul. I'm a community organizer here in Philadelphia, and as well as a steering committee member of Philadelphia Neighborhood Networks, which is one of the many organizations that is part of the Philadelphia Public Bank Coalition. I am honored and excited to serve as one of your hosts for today's event for the next few hours. I'm going to turn it over to my co-host to introduce herself, and then we'll get right into it. Vanessa?
Thanks so much, Steve. It's so exciting to be here today. I am Vanessa Lowe. I do a couple of things. I co-chair the Economic Dignity Team for POWER, which stands for Philadelphians Organized to Witness, Empower, and Rebuild. And I also have a radio show called Vanessa's Money Hour on Germantown Community Radio. So glad you're here with us today. I am going to introduce Councilmember Derek Green. Councilmember Derek Green is serving his second term as City Council member at large. He has a background in banking and a deep commitment to sustainable economic development, particularly for Philly's Black and Brown neighborhoods. He chairs the Committee on Finance and Disability. His top legislative priority is the establishment of Philadelphia Public Bank. Councilmember Green, I'll turn it over to you.
Thank you, Vanessa. Steve, thank you for moderating this outstanding conversation with people from all over, not only the city of Philadelphia, the Commonwealth of Pennsylvania, the Mid-Atlantic region, but across the nation. It's a real pleasure to bring together all these various people and activists, all committed to bringing together a vision for a public bank. Now, today's Philadelphia Public Bank Visioning Summit is a real opportunity for people to hear what's happening regarding this issue, not just at the Philadelphia level, not just around states around the region, but really around the country, but also give all of the attendees an opportunity to network, communicate with each other, and really learn about public banking and meet so many of your peers that are working on this issue. So as you're putting your information in the chat feature, make sure you maybe have a pen or a pencil to jot down some names, some information, some contacts. We hope that this summit will be a great opportunity to really engage in a lot of different conversations with people from all around the country who are committed to public banking. We're going to have a great panel. I want to thank the Philadelphia Public Banking Coalition for all of their hard work in pulling this activity together. We have a number of organizations and co-sponsors from Philadelphia Neighborhood Networks, RC, Our Schools, PA Working Families Party, Sustainable Business Network, the Philadelphia Area Cooperative Alliance, Disabled in Action, Power Interfaith, ACRE, the Philadelphia Revenue Project, the Public Banking Institute, and a Smart Collaboration. If I missed any of our co-sponsors, charge it to the brain and not the heart, but this really has been a collaborative activity. And we've been building upon this conversation through our monthly Financing Philadelphia's Future conversations, where we've been delighted to have who I call the Oprah of public banking, Vanessa Lowe, who's been able to host us every month and have a great conversation. We've had a number of dialogues regarding public banking here in Philadelphia. And I'm glad you've now added your co-host, we'll say the Steve Harvey of public banking, Steve Paul, who's going to be a great person to join in with Vanessa. So we're going to have a great opportunity to have some great conversation and great engagement. We don't have to worry about the weather because we are inside, we're here virtually, and we're going to have a great day having a great conversation about public banking. I just can't wait to hear all of the conversations and the perspectives on how public banking can address so many different issues, from racial justice and the cooperative economy, public banking and local inequities, and dealing with issues like land trust, housing, and environmental justice, as well as I said at the top of my presentation, the movement of public banking all around the country. And we'll spend a little time talking about the legislation we're working on here in Philadelphia. So thank all of you for being here this afternoon to join, which I hope will be a great, engaging conversation where you get a lot of information, have some fun, meet some new people, and help us move forward with this initiative of public banking in the United States. So thank you and welcome.
Thank you, Councilman Green, for that great overview of our agenda today. Super excited. Before we get right into it, I wanted, as someone who works on state and local policy, as an organizer, I'm someone that believes the people closest to the problem are closest to the solution, right? So we want to hear from you. We want this to be a conversation. We want to know how you feel about a public bank in Philadelphia. We want to learn if there's anything you want to hear about. Is there any suggestions you want or feedback you want to give us? So please put, as Councilman Green mentioned, please put your questions in the chat. We want this to be sort of an interactive activity. This event today is structured in a way to incorporate questions for the presenters all along the way. So we want to make sure we're addressing the issues that you want to hear about and the things you want to learn about. First kind of agenda item, a quick poem from steering committee member and Philadelphia Public Bank Coalition member, Susan Wendell. We like to start, every event to get our spirits, our mind, and everything right and get us focused. For those of you who don't know Susan, Susan Wendell is a member of Philadelphia Public Bank Coalition, where she represents both Power Interfaith's Economic Dignity Team, as well as Philadelphia Neighborhood Network. She is a poet, a teaching artist, and an explorer of the mystical path. Susan is an author of 2 books of letters and poems, titled Through the Gates, A Practice for Counting the Omer, and its newly published sequel, The Second Omer Journey. Susan offers her poetry as eulogy and inspiration in interfaith religious services, as well as a number of rallies, fundraisers, and other gatherings for social justice. Susan makes sure that every meeting that we do at the Public Bank Coalition begins with a poem, and this is no different. So with that said, I'll pass it over to Susan.
I don't know if it's a quick poem, but it's not too long a poem. I try to do everything slowly to move us into the depths of why we're here, to remember that. So here we are. What is the purpose of an economy? What is the purpose of an economy? You must take the words in slowly, to remembering to savor the fragrance of the question itself. Purpose? Economy? All day long, the household brims with brothy pleasure, air infused with anticipation, the coming satisfactions of a meal to be shared with all who breathe together in this house. Now, when the time is right, take the words to your mouth. Enjoy the doubled kiss of purpose. Your lips were meant for this cup. Economy, it means management of the household. Let the sounds with their meaning traverse your happy tongue and be swallowed. They will land in the cavern of your belly, in the place where you need to be fed. No one goes hungry. No one goes hungry in a good home. Everyone has a place to rest. Let us do the work. Let us do the work. The words are asking, what is the purpose of an economy? Let us make this home a good home.
Just want to give a few moments of silence to take that in. Thank you, Susan, so very much for that. All right, next on the agenda is we're going to watch a brief film. It's a cartoon, but it is...
In this city, in anywhere USA, the residents of this city have decided they want a park. The city council agrees the park is a great idea. But how will they pay for it? The city needs to borrow money. But borrowing money means the city has to pay a lot more money in interest and fees that could double the cost of the park. And that money leaves the city. It goes to Wall Street investors who really don't care about the park or the city at all. This is a bad deal for the city and its residents. There's a much better option, an option that's been proven around the world. A public bank. A public bank is a bank owned by the residents of a city, state, region, or territory. Private Wall Street banks just want to make profits for their shareholders. But public banks have a mission to serve the public good. They have to reflect the values and needs of the community. And that makes all the difference. Politicians don't run a public bank. Their job is to just set it up by listening to what the people need and want. Public banks are run by skilled local bankers who know their neighbors. Residents are on the supervising board to keep tabs on what the bank's doing. Public banks can save communities lots of money. First, they cut out expensive Wall Street fees, which can be hundreds of millions of dollars a year in a big city. Second, they can lower interest rates on the city's loans, which means there's more money to spend on other projects. Third, their profits go back to the city, not to Wall Street, so a public bank can make money for the city. All this means the people of the city have a lot more money to fund all the things they need, such as bridges, good roads, good schools, renewable energy, affordable housing, lower taxes, and the park the people wanted. They now control their own money, and they can build their own future. Join the movement. To find out more, go to publicbankinginstitute.org.
All right. Well, that brings us to our first panel conversation today. And we have an amazing moderator for this panel. We'll be focusing on, public bank as it relates to racial justice and cooperative economy. And so we'll be in this conversation for about 34 minutes. And remember, at the end of this conversation, there'll be about 10 minutes of Q&A. So when folks are having a conversation, we encourage you to drop your questions in the chat as you think of them, or wait till the conversation's over. And then Vanessa will lead us through a Q&A. So our moderator for this conversation is Walt McRee. Walter was once a Philadelphia FM radio personality and recently became a founding member of the Pennsylvania Project in 2011 and helped us start the Philadelphia Public Bank Initiative. He became president and board chair of the National Public Banking Institute in 2015, where he continues to serve as a senior advisor and a producer of the public banking radio and TV shows, It's Our Money and the Public Bank Solution. Walt has been involved with many state and municipal banking initiatives nationally, including as co-director of Banking on New Jersey. In 2017, he founded the Public Banking Associates, a national consultancy of public banking experts, which advises government leaders who are pursuing the creation of public banks. So Walt is an amazing person to be moderating this conversation for the next 20 minutes. With that, I'll turn it over to you, Walt.
Well, thank you, Steve. And hello, everyone. As we get started on this afternoon of discussion about creating a publicly owned bank for Philadelphia, a bank that'll focus on serving the interests of the people in our communities, let's take a moment to consider why we're here talking about this at all. The short answer is that our current banking system is privately owned and focused on making profits for itself, using our tax money to do so. In just 1 year, the city of Philadelphia sent almost $250 million to Wall Street just to pay for the interest on the money that it borrowed to take care of its needs. Our first speaker today, Saqib Bhatti, reports that and this is a quote, our current municipal finance system is intentionally broken. It allows banks and investors to profit from the pain and suffering in communities of color and poor neighborhoods. And of course, we're not alone. State and local governments all over the country are obliged to use Wall Street banks and private funding out of necessity because there have been no alternatives. And that has cost the cities and states of the nation $160 billion each year for the privilege. Now, no one is saying that a Philadelphia public bank is going to do away with that enormous annual interest expense in the near future. With our own bank, though, we can begin a virtuous cycle of self-investment in which we keep our money at home and invest in each other rather than having our money used by Wall Street banks to speculate on global financial intrigues. Now, one thing we all need to know and remember as we start out today, and that is that banks create new money when they make loans. It's not borrowed, it is created. Just as the same process that was used by our forebears in Philadelphia over 200 years ago, which is really how the public banking effort in America started, the American system. Banking was then, and should be now, a public utility that's dedicated to providing the lifeblood of our economy through affordable, responsible credit. So let's also make another distinction as we start out today, and that is namely that the drive for public banking is not a drive against locally owned community banks and credit unions. They are our invested partners in community development. A Philadelphia public bank can be a boon to their success. As you'll hear from our second speaker, Dr. Amara Enyia, there are some wonderful prospects that we could reasonably consider if we had our own bank, like creating a cooperative economy that builds on inherent community economic strengths. Amara is a highly regarded leader in community economic development. She is a public policy expert for city and state policy and has been working also in international affairs and foreign policy. And she is an esteemed member of our Public Banking Institute Advisory Board. Saqib Bhatti, who is our first speaker, is the co-executive director of the Action Center on Race and the Economy. Saqib has been a notable contributor to the national public banking discussion over these years, landmark writings for the Roosevelt Institute and many other channels. Saqib launched the Refund America project back in 2013, and he serves on the boards of the Americans for Financial Reform Education Fund, the Midwest Academy, and many others. Now, let's turn it over to Saqib for his presentation. Saqib?
Thanks, Walt. Good afternoon, everyone. I'm really thrilled to really be joining you all today at this banking summit because really public banking is a racial justice issue. Let me just say that again. Public banking is a racial justice issue. To be able to fully invest in Black and Brown communities in cities like Philadelphia, we need to take Wall Street out of the picture. We know what healthy, thriving communities look like. Communities where schools are fully and equitably funded so that every child has the opportunity to shine. Communities where there are deep investments in public health and social services to ensure our families have a strong safety net. Communities where every family can live in a home they love and can earn a thriving wage doing work that is meaningful to them. But here's the thing, right? In our capitalist economy, thriving communities require robust financial infrastructure. And that is why public banking is a racial justice issue, because we know that we cannot rely on the goodwill of Wall Street or the private sector to provide Black and Brown communities a critical infrastructure that we need in a fair and equitable manner. So, fun fact, the Bureau of Labor Statistics calls the banking sector credit intermediation. And so what does that mean? It means that bankers are supposed to be essentially middlemen whose job is to help those with savings connect to those who actually need to borrow, right? So pay X% interest to depositors, charge Y% interest to borrowers, and their profit is Y minus X, right? And that's at least what traditional plain vanilla banking was supposed to be. Now, this is how you know that our entire economy is basically a scam, right? They say that markets are efficient. Well, if banking is credit intermediation, then an efficient banker would be one who only takes a small cut for helping borrowers connect to depositors. But the finance sector now accounts for more than a third of corporate profits in the US, right? How efficient is a market in which a middleman that produces very little actual value accounts for a third of the profits? So how have these intermediaries become so profitable? It's by extracting wealth from their customers, which is us, right? And we have seen time and again that banks target BIPOC communities with the worst extraction. Banks like Wells Fargo targeted Black and Latinx families with predatory mortgages. And then when those families went into foreclosure, those same banks were less willing to offer them sustainable loan modifications that would help them stay in their homes. banks are less willing to lend to Black-owned small businesses, which are the bedrock of Black employment. We have a Federal Reserve Chair right now that says, "Oh, there's nothing we can do to address the racial wealth gap and the racial employment gap." So if you actually invested in Black-owned small businesses, you could actually make a dent on the Black unemployment rate and actually help achieve equity there, right? Bank call center operators have come forth and said that they've been directed to offer higher interest rates to credit card holders who, when they call in, they press 1 for a Spanish-speaking operator. So if you speak Spanish, your only option in many places is a higher interest rate. Right? Bank branch closures, when banks are closing branches, they're nearly always targeting that in Black and Latinx communities, creating banking deserts. And especially when, as ATM fees continue to climb for folks who have to go to ATMs or earn for their own bank, in these banking deserts, what it means is that BIPOC folks who live there actually end up having to pay for the ATM fees, right? They're disproportionately hit with these higher ATM fees. And it's not just ATM fees, it's overdraft fees, late fees, a whole span of other fees that BIPOC customers bear the brunt of. And let's not forget that it's not just us as individuals who banks are extracting from, it's also us as taxpayers. Just like banks target cash-strapped cities with predatory loans, they also target cash-strapped cities and states and school districts with predatory municipal finance deals that drain hundreds of billions of taxpayers from our budgets and result in services. And we also know that just like banks target BIPOC families with higher interest rates, we have shown that places with low incomes, they're actually using this debt to take away our local democratic rights, particularly in Black and brown communities. So banks sell us this debt on predatory terms. And then when it comes time for budget cuts, it's always services in Black and brown communities that are on the chopping block, because that's how the system is designed. And that is why public banking is a racial justice issue. If we have our own bank that is accountable to our communities, then we can ensure that we have the financial infrastructure that we need to thrive without being at the mercy of bankers that are just looking to scam us so they can pad their profits. A public bank can help us offer high-quality banking options to underbanked communities, especially in Black and brown neighborhoods across the country, across the city of Philadelphia, and every place where we do this. It can help our cities and school districts access low-cost loans so we can stop paying the $160 billion in interest to bondholders on debt that we have to pay as taxpayers. And then we can fund the services that we need in our communities. A public bank can help us invest in Black and brown communities by taking Wall Street profit out of the equation and ensuring that our money stays in our communities. And more than anything else, that is why public banking is a racial justice issue. Thank you.
All right, thank you, Saqib. And now we turn to Amara Enyia in Chicago.
Thank you so much, Saqib, and thanks to Walt, of course. It's always a pleasure working with you. And also thank you to everyone that's on this call for this very important summit. I am really excited that so many have actually gathered on a Saturday morning to talk about public banking. 5 years ago, or even 10 years ago, this would have been unimaginable. I don't think we would have had the numbers that we're seeing just for this summit today. So it's very encouraging. I think what I want to do just briefly is to add a little bit of context to the conversation and what we're really driving at. I think Saqib has done an amazing job of sort of laying out the role that private banks have played in our cities, the role that they have played in the ongoing disinvestment in many of our communities. But if we zoom out a little bit to think about what we're actually talking about, we're talking about whether or not people are able to live fully actualized lives with dignity in their communities. Ultimately, everything that we're talking about today is tied back to whether or not people have access to the things that would create a high quality of life, whether that's healthcare, a home, education, a job, and so on and so forth. And so while we're talking about public banking, we're really talking about what kinds of systems can we create that would allow people to live fully actualized lives with dignity. And it's important that we keep that at the forefront of our minds. What that means is that public banking is part of what needs to be a holistic approach to addressing the many challenges that we face. And so this is a structural issue that we're trying to address. It's a systemic issue that we're trying to address. And structural and systemic issues require structural and systemic solutions. We've all seen how, particularly when there are extreme challenges that we're all facing, when we get sort of symbolic measures, symbolic gestures that don't actually address the root causes of our issues. We know that this is not a situation where a few more grants here and there will be able to turn the tide. This is not a situation where if more people get access to, let's go for a drive. More people getting access to a few jobs here or there, particularly if they're not even paying a living wage, will address the issue. And so for those who are elected officials in this summit, this is a time where we have to be bold. We know that far too often the approach is to sort of play to the middle, or the approach is to sort of default to the notion that we have to compromise. And then when we look up, we've not even gotten the bare minimum of what people need. And so a lot of the unrest that we're seeing in our communities, particularly last year, is a result of longstanding issues that have been brewing for decades. Again, systemic and structural issues that require systemic and structural solutions. And so we talk about public banking, but we're also required, in my view, to talk about what a cooperative economy looks like, a solidarity economy. So this is really rethinking how we democratize work. So the notion that people don't have to come to work when they're sick, all of a sudden that became front and center because of the pandemic. But prior to that, people were expected to simply come to work sick. The notion of paid sick leave was earth-shaking for some. The notion of a wage that actually is individual and family sustaining, right? The notion of being able to partake in the benefits of one's labor collectively in a worker-owned cooperative. And so we have to start rethinking not just specific components of the economy, but the economy as a whole. And that includes worker-owned cooperatives. It includes talking about housing cooperatives as we're staring at just an extreme housing crisis. For those of you who are following what's happening in the housing sector, you have these new companies that masquerade as tech companies. They're not tech companies. They've just figured out how to create an internet or online mechanism to, again, siphon resources from those who can least afford to pay for their own profit. But the latest that, and I feel compelled to share this example because housing is so critical, where they're buying up single family homes and then selling off pieces of it to individuals under the guise of the notion that everyone should have access to a second home. That's literally, this is a company called Picasso. That was the ethos when they started. They said everyone should have access to a second home, while we're looking at people who don't even have a first home, right? So housing cooperatives, community land trusts, the issue of gentrification and people being pushed out of their communities is huge. How do we maintain wealth in communities? How do we ensure that people who live in their neighborhoods have access to the land, even as it appreciates in value, that it doesn't become a reason to push people out of their homes? These are the many components of the solidarity economy, of which public banking is a major part, because the realm of finance has been used historically, almost from the very beginning, to the detriment of the masses. And I think as we're talking about public banking, and we're talking about banks in particular, it's important to have a bit of historical context. So many of these Wall Street banks that we reference, your JP Morgans, your Bank of Americas, they got their start using enslaved people as collateral. So this is something that we just need to know. From the very beginning, many of these Wall Street banks use enslaved people as collateral. And we know that Bank of America, what's now Bank of America, profited from Haiti having to pay reparations to France for their independence. These are facts that if we go back into history, you'll see the predatory leanings or the predatory tendencies of these banks from the very beginning. They built their institutions on the backs of Black people, on the backs of Indigenous folks, on the backs of enslaved people. And now, as we fast forward to 2021, there's a notion that somehow they will be able to lead the charge on how to address the systemic and structural issues that our communities face. And I think that historical context is important for these conversations so that we understand these institutions that we're dealing with. Because what's become increasingly popular, particularly after the uprisings last year, is many of these Wall Street banks making these drastic proclamations. They're going to give $30 billion, or not give, they're going to commit $30 billion to addressing racial injustice in this country. They're going to give $5 billion, $10 billion. If you go down the list, many of them have made these kinds of commitments in the last year. If you actually do a little bit of digging, you'll see that what's actually being committed are just other mechanisms that will ultimately result in profits for them. And so we cannot rely on private banks to address systems that were actually built to keep the masses, to essentially keep the masses from being able to live self-determining lives of dignity. Because I'm based in Chicago, I always have to use Chicago as an example I hate to use it as an example of, the things that are wrong, but because there are many great things about the city, but I think there are some instructive examples that we can use right here to help underscore why this conversation, this summit on public banking is so important. One is there was some research that was done last year in 2020 that looked at lending practices in Chicago. And it looked at the major banks that we have. Most of them are depositories for the city government, and found that when it came to home lending, JP Morgan Chase, for example, lends 8 cents to every dollar. So for every dollar that was lent to a white borrower, they lent 8 cents to a Black borrower. This bank lent more to one predominantly white community in Chicago than all of Chicago's Black neighborhoods combined. And just so that you know, Chicago is about 30% split evenly when you look at the racial demographics. So it's about 30% white, about 30% Latino, about 30% Black, roughly speaking. So the notion of a bank lending more to one community, one predominantly white community in Chicago than all of Chicago's Black neighborhoods combined is stunning. And again, this is not in 1960. This is in 2020. This is last year. Other banks have similar statistics when you actually look at their lending practices. And we know that the flow of capital into communities is one of the best ways to actually increase things like household income, many economic indicators. And what we've seen is that redlining never really ended. What we've seen is that these banks who hold hundreds of millions of dollars as a depository for the city of Chicago, our money that we pay the city, can't even bring themselves to lend by any measure, an equitable manner. More recently, just about a week ago, we found that the Inspector General did an audit and found that the city is not even using lending data to determine which banks are depositories. So the money that they are getting as depositories for the city, they still can't really be bothered to actually change their lending practices, and the city wasn't holding them accountable. So again, where is the benefit for these institutions? It's actually been quite harmful. We talk a lot about racial justice issues and how public banking can fit within the racial justice framework. And I think it's important to note that it is not a panacea for all of these issues. There will still be the need for accountability when it comes to, even with the public bank, there's still a need for accountability. There's still a need to be connected to these injustices that exist in society. But what it can actually do is ensure that there's some return on investment. We have to think about the fact that in so many of our communities that have been disinvested for decades, what are our residents getting for the money that they pay to the city, whether by taxes, by fees, fines and forfeitures, or otherwise? They're not getting a return on investment when by every metric, our communities are still disinvested. We still have a 16-year life expectancy gap between the downtown of Chicago and the west side of Chicago, about 3 miles west, 16 years. When we look at unemployment, we see a huge gap in terms of how our Black and Brown communities are faring versus other communities. And when we look at how resources, how funds, how capital is invested, we continue to see the uneven investment that is only perpetuating a lot of the problems that we're seeing. And so last year's uprisings, I think, are not just in response to what happened last year. It is people saying in their communities that enough is enough, that we can't accept symbolic wins any longer. We can't accept sort of nibbling around the edges of our issues with these sort of solutions that people know won't really work. This is a moment where we have to meet the demands of the people, and we have to meet them where they are. And again, what people are demanding are structural changes to the economic systems that govern our lives. And public banking fits within that framework. It fits within the framework of a solidarity economy. And for those who are in positions of leadership, it requires a boldness and a courage to go beyond what's been done before. But for everyone else on this call, we also have a role to play. As I mentioned in my opening, 5 years ago, and definitely 10 years ago, I can't even imagine having a call with so many folks on the line who are interested in public banking. I mean, those of us who've been early in the work know the crickets that we heard whenever we talked about an issue of public banking, or even talking about cooperatives and worker-owned cooperatives. It was just this foreign concept. So much work has been done to get to this point by so many of you, by the Public Banking Institute, to really have a movement where around the country, progress is being made. And so my charge for all of us is to continue pressing forward, that we have to talk to our people, we have to organize in our communities, and we cannot settle for anything less than the structural and systemic changes that our people deserve.
Amen. Thanks, Amara. Vanessa is going to handle some questions from the group. But thanks so much for that, Amara. Vanessa?
All right. Wow. Really great information. Fantastic stuff. So we have Frank Iannuzzi and Beth Finn. This is a team effort here. Who are taking your questions from the chat. When you're entering your questions, please clarify if you're asking a particular person. We had Saqib Bhatti and Amara. I apologize, Amara, I'm not seeing your name right in front of me, but if you know who you're asking the question to, if it's specific to a particular person. Right, let's go to Beth first. Beth, any questions?
Yes, thanks, Vanessa. We've had a number of questions in the chat, and some of them are more general, and I may save them for a different panel because I think they're more appropriate for those panels. But for this panel, I think this is a more general question for the panel. Colleen has asked, are credit unions better, meaning are they less predatory? Should this or would this be a model for a public bank, something more like a credit union than a traditional bank?
I'd like to start with Amara for that one. Amara, can you speak to that?
So the question is whether a credit union would be a better model. Mm-hmm. I think it's important, and Walt kind of outlined this in his opening statement, that the public bank doesn't compete with local banks or smaller banks or community banks, but it is absolutely necessary as a replacement for the Wall Street banks that currently are depositories for cities and for states. There are different functions. So, for example, a credit union could be for individual depositories, whereas a public bank, it doesn't fit within that framework necessarily. Handling things like major infrastructure projects for cities or for a city or for a state is sort of a different kind of work. So there are differences that a credit union won't necessarily fulfill. But again, a public bank can actually enhance the ability for a credit union to expand its own capacity and can play that same role for community banks. So it's not in competition to but a public bank is definitely a replacement for the current landscape of Wall Street banks that our city and state governments are tied to. Walt, I don't know if you have
I would just say that, credit unions have certain regulatory limitations on what they can produce. You were indicating that. But also what you said was very important is that credit unions work directly with people at the street level, Main Street level, which is why they're so important along with community banks. The public bank is really, they're kind of a partner to local lenders, bring in an extra capital strength and capability, but also focused on different projects, bigger projects. So I think you made that point also, Amara. Yeah.
One thing I'd like to just add to that is, so one of the other big things is that credit unions as well as community banks, they're still operating within the rules of the existing system, right? The truth is that credit unions will often also charge overdraft fees, right? They will also charge ATM fees. There's sometimes there might be more ways. I lost y'all, so I guess I'll say basically that often credit unions, community banks, because they're still operating within the system that exists, they don't actually have the market power to actually change the system. So they also end up relying on fees, relying on various other practices that really Wall Street holds up. But that's part of how you survive in this industry currently is by playing that game. And so often when there's legislation, you will have the credit union lobby with community bankers actually fronting for the big banks on some of these issues. And so I think that's one thing that's also important about a public bank is that they can actually help shift the market, right? That it's actually something that has enough market power to be able to say, actually, here's how banking should be, and we're not bound by the same considerations of the other private sector actors. And at the end of the day, that actually is another way in which public banks to really sort of enhance and actually, basically make it, can actually also be a check on some of the more community, the more local pieces of the banking infrastructure that are still at the end of the day private sector and part of the system that exists.
All right, let's try to get at least one more question in if we can before we go to the next section. Frank, do you have a question? You may be muted, and if not, I'm going to go back to Beth.
Sorry, I'm not muted within Zoom. I was muted on my keyboard. Apologies. There was a question regarding how is the public bank able to control, for instance, its investments in housing, and can it require that some of its housing investments be affordable? And I think that would be one example of ways that it can drive how it's lending toward particular goals.
Frank, if I may, I think that Carl Beitel, who's going to be speaking later on today, will really have a much better handle on that, although Amara and Saqib probably do as well. But affordable housing is an area that's kind of a misnomer in some ways. We've seen affordable housing being a sop to private developers in some structures. The public bank, I think, can bring a new level of integrity and potentially, I think, excitingly, some creativity in how we use the equity of to build an affordable housing inventory and opportunities for people.
Great. Okay, let's go back to Beth and maybe get one more question. I think we got about a minute and a half.
Sure. Lisa asks, could a public bank be used to fund public renewable energy development that is, quote unquote, discouraged or not allowed under state or other laws?
So I'm going to encourage folks to go to our Philadelphia Public Banking Coalition website because we had, I'm going to get their name wrong, but I think it's sometimes called the Green Bank, but it's essentially an arm of, I think the Power Authority, but they are finding ways to create more financing for essentially green and things like that. So that's an Financing Philadelphia's Future that you can find there. Walt.
Yeah, if I just throw in on that, it's a bit of a misnomer. The green banks are typically revolving funds in which, whether states have them, most states have them, but they're not really banks. So they're not creating money, they're leveraging their money with private dollars. Which is much different than creating your own money, which actually builds the monetary strength of the economy instead of moving it from one city to into another and just kind of keeping things static. But green energy, you should know, around the world, public banks have been really instrumental in moving that forward. Like, for example, the KfW in Germany has been the prime driver of about 75% of their investment in green energy. And I think, and renewable energy and so forth. So I think we see too that the inherent opportunity for public bank is for them to do things that commercial banks don't want to do or aren't likely to do. So we have patient capital potential to invest in some of these projects that the market, the private capital market, may not have much interest in unless it can, make some money.
And I just wanted to add to that, to Walt's statement, because I think it's really important that we put in context not only emerging sectors like the green sector, renewables, also cannabis. I don't know what the status is in Pennsylvania, but I know in Illinois it just became legal, and in other states it's become legal, and it's still there's still challenges because at the federal level it is not legal. And so when we're thinking about emerging sectors and how a public bank could serve as a framework for those emerging sectors, there's so many opportunities in that space. But also just kind of getting back to nuts and bolts when it comes to infrastructure. So we're now in the budget reconciliation process is playing out now at the national level, where they're arguing around about $3.5 trillion is supposed to go to infrastructure and what infrastructure actually means. When you go to any city and look at critical infrastructure, you'll notice, at least most cities, have extreme challenges with upgrading current infrastructure. In Chicago, we still use lead water lines, which, we know is a neurotoxin. There's severe effects, negative effects for that. And so because of the cost has always been the prohibitor, the reason why it doesn't get done, those lead lines don't get replaced. And we've only replaced maybe a few lines out of thousands that need to be replaced because of the cost. So these are the kinds of projects that they will go to the JP Morgan Chase, the Bank of America, the Wells Fargo, which are actually depositories, and they'll get these extremely high interest rates that almost make it prohibitive to even embark on upgrading that infrastructure. And so when we think about what a public bank can do, it's emerging sectors for sure, but it's also just the nuts and bolts, critical infrastructure that's required for cities to be quality, for cities to be safe, and for our infrastructure to actually meet the needs of the people. So I think that's also important to keep in mind.
Thank you for that comment, Amara. All right, we're actually doing pretty good on time. We're about 1 minute into the next section, but I'm going to turn it back over to Steve so we can move into the next panel. Steve?
Awesome. Thanks, Vanessa. Man, that last section really spoke to me a lot, y'all. I'm just thinking, as a Black man, as a Haitian immigrant, sometimes I really get angry, like hearing Dr. Omar's, story about or presentation, thinking about Bank of America's historical influence in my home country of Haiti, gets me angry. I'm ready to take my money back from Wall Street. To know that our money has been used against us, as it's really upsetting. I think one thing we all by now are realizing and learning from these amazing speakers is that as we come out of this pandemic, hopefully soon, we need new ideas. We need bold visions that can meet this moment that we are in. Dr. Murray talked about this, the uprising, these things didn't just happen overnight. And so we really need to rethink how our economy and our banking systems are restructured. And I think what you've heard is that the public bank is that idea to live up to that moment. The truth is we can't return to how things were or continue to rely on a system that is built on greed and inequity, a system that has, as you heard, have hurt so many people in our communities. So for the next 30 minutes, you'll hear how a public bank can actually take us into the future. And so what I'll say is, as someone who's worked on several local issues and campaigns around housing justice to protect renters and homeowners, I'm super excited about this conversation, specifically how establishing a public bank can lead us closer to housing justice for so many people in our city. And our next panel is the perfect group of people to talk about this. They have broad experience in community organizing, economy, economics, policy. So yeah, let's get into it. So our first speaker, we have two Peters today with us. Our first speaker is going to be Peter Sabonis. Peter is a human rights development program director at Partners for Dignity and Rights, promoting community economic development. He has successfully worked with community organizations to prioritize community land trusts in Baltimore throughout the city's affordable housing trust fund. Next, we also will have Carl Bito, sorry if I screw up your last name, Carl, who is the director of the Public Banking Project out of the Rocky Mountain Public Bank Institute, where he conducted research funded by the Ford Foundation. He is currently a senior analyst at Harvey Rose Associate in San Francisco, where he consults the Board of Supervisors about affordable housing and public banking. Finally, we'll also have today Peter Winslow give us a presentation. Peter is actually a member of the Philadelphia Public Banking Coalition, and he is also president of a Smart Collaboration. He is an advocate for environmental justice who was formerly the CEO of a company that manufactured, sold, and financed low-income housing. So each of these presenters will have about 8 minutes to present, and then just like the last panel, we'll go right into your questions. So again, feel free to put those in the chat. So we'll go Peter Sabonis, Carl, and then Peter Winslow. Pass it over to you, Peter.
Okay, thank you. Actually, I planned for 6 minutes, so I can kick those 2 minutes over to somebody else. I have been working for a number of years on community development in Baltimore with Black neighborhoods and community organizers in Black neighborhoods. And many of these neighborhoods have suffered from years and years of disinvestment, and many parts of them are undergoing gentrification as well. Two things going on in the same city. I want to get into community land trust because community land ownership has really been something that has gotten a lot of traction in these communities. And I'm going to share a PowerPoint here. Yep, that's the red line PowerPoint. Hold on, here we go. First, define community land trusts because they can be confused with things like a land bank, which you have in Philadelphia, which is a government entity that's focused on the conversion of vacant, abandoned, and tax delinquent properties. Sometimes community land trusts are confused with conservation land trusts, which is about open space, green space, staying that way permanently through conservation easement. But community land trusts are nonprofit, democratic organizations that acquire, own, and steward land permanently for the common good. They are, that common good is manifested by providing affordable housing, commercial spaces, community spaces, or even farming on that community-owned land. That's the classic CLT. And the classic CLT is, it's a democratic organization. It's run by the community. It's got a defined service area. It's got a voting membership. It's got a tripartite or three-part board of neighbors, residents on the land, and public stakeholders. And it is devoted to equity. It's democracy and equity in the same place, and that equity is about keeping land affordable and resisting the pressures that the marketplace has that drives up land values. And this is done primarily through a concept of dual ownership. That is, the community owns the land, and an individual, household, or entity owns what are called legally the improvements on the land, the house, the business, the farm, whatever. And the community land trust legally separates these two. But yet it brings them back together again in what's called a ground lease, which ties the improvements on the land together with the land. And it gives the community, the CLT, the right of first refusal if the homeowner wants to sell. It also, the ground lease sets by a formula that the community came up with, a resale price that keeps it always affordable. And the community is the one who comes up with the formula. And the homeowner knows going in, okay, this is the formula. And the homeowner may get a portion of any equity that's realized, any profit that might be realized. And it's through that formula. But the formula is designed basically to keep the next household, the next buyer, in the same income range as the prior buyer. And this is done in a way, despite that guards against the property going to high market prices through this formula. It has been shown across the United States to be an effective model. You get a lower price initially, you get a lower price at resale, and this happens again and again and again. So what's the problem here? There's a problem with finance. And as we've done community development in Baltimore and community land trust, I can tell you this is just one of many things that have led me and us to public banking. The ground lease, just with the mortgages alone, and take a home ownership situation. The ground lease that ties the improvements and land together states that if the owner of a house defaults on the mortgage, the CLT has the right to be notified and an opportunity to cure the default. Now, this is great. It keeps these CLT houses from defaulting and people from losing their homes. Now, banks, as you know, they make money by packaging mortgages and selling them to investors. Well, these CLT rights in these ground leases impact those mortgages, and they make the banks reluctant and nervous to provide CLT mortgages to CLT homeowners. So there have been some workarounds to date. Most community banks are really the ones who end up loaning to CLTs the most. And thank God they're there. But they hold these loans. They're portfolio loans. And there's only so many of those loans they can do. They don't resell them. And this keeps the CLT number small and loans relative to it small. And there's also a program where Fannie Mae agrees to buy CLT loans under certain circumstances. But the way banks operate, jumping through those hoops is not only a challenge for those trying to jump through them, but also a challenge for the administrators who find these programs to be out of the ordinary and thus don't get much attention or policy and procedural formulation, I should say. So we see the public banking option, at least in the CLT mortgage area, as one place that could facilitate CLTs getting to scale by backing or buying CLT loans from community banks or loaning to CLTs or backing loan problems, etc. And that's where I'm going to stop and give it over, stop sharing and give it over to the other speakers. I could go on what I call redlining 2.0, which we've experienced a lot in our CLT work, but maybe we can talk about that in the discussion. Thanks.
Turn it over to Carl.
Oh, hi, everybody. Can you hear me?
Yes, we can hear you.
Okay. So I think the prior panel did a very good job kind of outlining some of the issues and problems and, a larger vision about what a public bank could do. I've done more kind of deep in the weeds work around public banking and housing, trying to look at how you could actually construct.
Please speak up.
Carl, can you speak up for a little, just a little bit? So,
excuse me?
Can you speak up a little bit? Some folks are having trouble hearing you.
Oh, okay, yeah. I'm not, yeah. Let me hold the computer a little closer. So, there's always kind of this problem talking about public banks because you go from the identification of the problem and then the sort of this kind of broad outline or the vision of what a different kind of financial system would really be about, which I think is how I see public banking, is really sort of a first step towards a more social finance model. And then getting into the actual nitty gritty of how do you try and develop a public bank that can begin to achieve some of these objectives. So I will try to not get too deep in the weeds. I tend to have a tendency to do that. But we all know that affordable housing is crisis. That's just a given. It's a huge need. It's been dominated by the financial sector and the real estate industry in the U.S. for 100 years, and we see the result. So the complexity when you talk about housing from a financial point of view, irrespective of what kind, whether it's public bank or private bank, is that a property loan is generally long term, right? It's not like a 2-year loan. It's like a 30-year loan, and that's what makes that loan affordable to a broad range of buyers, of people who are trying to purchase homes. The issue you immediately encounter when you start to roll up your sleeves and figure out how can we make this work, particularly in cities that are very expensive already, is that you need to figure out a way to kind of get to large volume. If you really want to make an impact, you want to make a lot of loans. And so the question is, how do you get to scale? And what banks do currently is, the prior speaker mentioned this, is that they make loans, they bundle them, and then they sell them. They sell the loans. And then they get more money and they make more loans and bundle them and sell them. And there's good things and bad things about that. But one thing it does is it lets banks lend a lot more than if they made all the loans for 30 years and just held them on their own loan portfolio, right? Because then they're tying up their capital for a very long period of time. And to give us a sense of the real challenges, I'm using some numbers from San Francisco. San Francisco is, you may have heard, it's a disaster, affordable housing disaster. It's an extremely expensive city at this point. We did models of looking at $2 billion into a public bank, and if it was to make loans for new housing development in the San Francisco market, this isn't true other places, but that sounds like a lot of money, but you'd get about 2,500 units out of it. And then that's kind of capital that's tied up for a long period of time. So, the reason I'm saying this is that, one of the things that, the construction of a public bank needs to think about is where do you get the sources of capital into the public bank? And then if you want to do certain things like support long-term housing development, you do need to think about could we create a different kind of network where we could make loans and then sell them to foundations or certain kinds of pension investment funds or those types of things. So it's just, the point I'm trying to make is that the public bank needs to be seen as kind of embedded in this larger network. So part of that network is the local community banks and the credit unions and the people on the ground who would actually be more properly placed to evaluate credit quality and make loans. And then the other part of it is, do you have ways to kind of, churn your portfolio, for instance? And so we've done, in San Francisco, a fair amount of work looking at this, and there are some ideas we could talk about in more detail at some point. So that's one. And then the other thing I want to just highlight is the difference between building new housing, which a lot of times when people talk about affordable housing, what they're referring to, like, how can we build new housing? And new housing is more expensive per unit than purchasing existing housing. And one thing that I would really encourage people in Philadelphia to think about is that you want to kind of think for the long term, and how do you defend or protect existing neighborhoods and populations from the effects of gentrification and displacement. And if you can begin to buy a lot of existing properties, in some cases using powers of eminent domain, there's a lot of things you could potentially look at doing, and land trusting them or turning them over. They could become direct publicly owned housing. They could be transferred to a nonprofit entity that would be set up. What you're essentially talking about is taking a lot of the housing and land market that is currently caught up in the U.S. and global financial system. Really, it's just a speculative asset for them. And how do you just remove that as an investment opportunity from the private sector? And if you were to do that, that you would, I think, have made a tremendous inroad into being able to stop this process that has been ongoing now for 3 decades of massive displacement, rising costs, those types of things. So those are just a couple of things. I'll just conclude that the challenge, and also in some sense, I guess I wouldn't call it fun, but sort of like trying to figure out how do you actually do this is that we need to think of it. We're trying to construct a institution that pursues certain objectives that are entirely different than those that govern the current institutional and regulatory order. So part of this thinking is alternative mechanisms. Let me just, one last thing. I think a big advantage of a publicly owned financial institution is if there was a change at the federal level, a political change at the federal level in a genuinely more progressive direction, far more than we're seeing now. You could imagine the public bank being kind of the conduit or the mechanism through which both federal money could be distributed locally, but also this mechanism I'm talking about how do you kind of allow local lending institutions, local public institutions to make loans and then sell them in a way that they're not just then going to be churned over into the global financial markets. So those are, just ideas, things to think about. Like I said, when you go from sort of the large level down to how do we make this work, it's kind of like this, it's hard sometimes to step down into the details without getting very, wonky and in the weeds. But hopefully that just indicates some of the things that need to be thought about.
Thank you so much, Carl, for that. So we'll have our final speaker now, and then we'll get to Q&A. Peter Winslow, I'll turn it over to you.
Hey, thanks, Steve. Let's envision how our public bank will improve the quality of life for every living thing through equitable empowerment of financial privilege, access to money, for those people who the current system has denied such privilege in the past, for those projects that the current system has failed to serve adequately. Philadelphia has identified an unmet need for $840 million per year to finance local minority-owned small businesses. Let's envision how to unleash that latent entrepreneurial energy. Let's envision a paradigm shift where the mission of our public bank is to serve as an intentional change agent, to infuse financial justice within our economic environment, to nurture the local financial ecosystem for the benefit of people and planet while promoting profit, to identify and fill inequity gaps in the availability of credit and access to financial services, to analyze and remove systemic impediments to desirable business activity. Consider the stakeholder interests that can be served by this mission. Within their environments, affordable housing concerns the environment in which people live. Business development concerns the environment in which people work. Public education concerns the environment where people learn. Financial justice is social justice applied within the financial context. Environmental justice is social justice viewed through an environmental lens. The collective application of fairness by our social world and our engagement with the natural world through the built world. Our environment is the conditions in which life exists. We experience the world passing through us, first as our perception of the natural environment, the biosphere embracing us along with the plants and animals with whom we share air, land, and water. Second, as our interaction with the built environment, our creations sustaining us in the places we live, work, and play, learn and pray, travel and communicate, our infrastructure, housing, industry. Third, as our engagement in the social environment, the cultural framework guiding us in the way we do things here, as expressed through our arts and sciences, laws and norms, politics, and commerce. We experience justice as our collective sense of what constitutes fair treatment. Justice exists only to the extent that people create it through combined effort to achieve communal agreement and harmony. Our public bank, if, as Martin Luther King Jr. observed, the arc of the moral universe is long, but it bends toward justice, it is we who must create the bending. Our public bank can do a lot of bending to correct the limitations and inequities of our current systems for confronting the persistent and existential challenges we face. The traditional financial system has promoted historical exploitation of human and natural resources, leading to sacrifice zones, blight, disease, squalor. Land, air, and water have been poisoned. Poor people, Black people, brown people are the populations most subjected to these conditions. This financial system allows environmental injustice. This financial system isn't fair. The situation must change. Environmental justice, like all justice, is about putting values into action. Our public bank must be driven by core values, not by a desire to maximize profits. Our public bank must be prudent, professionally managed, and financially self-sustaining. Our public bank must be guided by explicit values that include the public welfare rather than private profit, transparency while respecting privacy, accountability, inclusion, democracy, regeneration instead of exploitation. The processes through which our public bank is brought into existence and subsequently operates should reflect consistent applications of our collectively agreed upon values. Our values need to be embedded within the legal structure that empowers our public bank, within the organizational culture of the professionals that manage our public bank, within the expectations of the investors, partners, and customers who do business with our public bank. With respect to developing our built environment, housing, for example, our public bank will support regenerative economic practices and oppose exploitation, require projects to incorporate renewable energy and energy efficiency technology, nourish natural habitat and sustainable ecosystems, preserve community identity and cohesion. The public bank will partner with CDFIs, credit unions, community banks, and others in the financial ecosystem, as well as with Philadelphia Gas Works, the largest publicly owned utility in the country, to finance transformation of its business model from selling fossil fuels to providing renewable energy and energy efficiency. With the Philadelphia Energy Authority and the Philadelphia Green Capital Corp to finance photovoltaic solar installations, electric and geothermal microgrids, and other renewable energy and energy efficiency projects. With the Philadelphia Housing Development Corporation and its Accelerator Fund to finance affordable housing development. Consider that 6,000 of Philadelphia's 1.6 million people are homeless, while 12,000 homes are vacant and 30,000 building lots are empty. So how can our public bank help us better match our need with our latent supply? Wouldn't investment to improve the habitability of our vacant housing stock be preferable to expenditures to park families and hotels? Consider that a Mortgage Bankers Association study following the housing market collapse in 2009 reported a foreclosure rate of only 0.56% for community land trusts, while 3.31% for prime and 15.58% for subprime mortgages, 6 and 29 times higher. How can public bank guarantees and credit enhancement best mitigate the misperceived risk of lending to community land trusts? Shouldn't financing for land acquisition and improvements be available irrespective of ownership structure for community land trusts and housing cooperatives? Consider that half of the worthwhile affordable housing projects can't proceed because sufficient grant money isn't available. How can the public bank help provide alternative funding sources for these projects? Consider that the city's longtime owner occupants program, Lowe, provides a homeowner tax abatement to help poor elderly residents cope with higher real estate assessments and taxes resulting from increased property values in gentrifying neighborhoods. But the city forgoes revenue and currently caps this program at $25 million. How can the public bank help to prevent dislocation from being a result of gentrification for neighborhoods? Couldn't the city receive current revenue while a public bank program finances deferred tax liabilities secured by increasing net asset value? Currently, the ability of our society to engage in projects that would improve our quality of life are severely constrained by lack of money. As a result, progress has been inadequate in addressing persistent systemic problems such as intergenerational wealth creation, response to climate catastrophe, and environmental injustice. Our public bank will help to ease the financial restraint. Then the grit, skills, and imagination of Philadelphians will allow us to take care of the rest. Our public bank will help us help ourselves to envision and work toward a better future. Thank you.
Thank you, Peter. Thank you all for those amazing presentations, Peter, Carl, and thank you, Peter, for that amazing, closing us out with that amazing presentation that really, highlights and shows what we're fighting for, right? Which is a public bank that is rooted in values of racial, economic, and environmental justice. We'll go to Q&A and then Vanessa will lead us to our first break. I'll turn it over to you, Vanessa, for questions.
Thanks so much. And thank all the speakers. Wow. So that discussion was about local inequities. And I am putting into the chat, let me go ahead and press return on that, a link to Financing Philadelphia's future episodes. They are on the public banking website. And I put that there because several of the guests who've been on with Councilmember Derek Green to talk about what a Philadelphia public bank might do have addressed things like, that really are sort of sitting outside of the regular access to funds, cooperatives. We had Emily Weiner on talking about, food co-ops and other types of co-ops that sometimes have trouble getting financing. We talked about the Green Bank and trying to finance renewable energy. And then we also had James Burnett from a local community development financial institution, institutions that have been set up and certified by U.S. Treasury to provide financing to underserved communities. So just a couple of ideas there, but I'm ready to go to some questions. Let's start this time with Frank. Do you have a question? All right, I'm not hearing from Frank. He may still be working on his muted. Beth, how about you? Do you have a question for our panels on this topic?
Yes, we have a question from Addie for Carl. Carl, it sounds like you're saying that a public bank would need to sell loans to institutional investors to support a meaningful increase in housing, but institutional investors may be at odds with the public bank's mission, especially during a financial downturn, for example, foreclosing on homes. How could a public bank protect its community from investors who buy its loans? And then there was a follow-up from Luke who said, related to that question, Luke found Carl's suggestion of selling loans to pension funds very interesting. Could this be a way to keep the money in Philadelphia and support a mutual economy? Use the bank as a safe public investment that ensures a secure retirement for Philly's public sector work. So that was kind of a 2-for-1. Anyway.
Yeah, no, those are really good questions. The answer to the first one is absolutely. I mean, most institutional investors, they want, the best rate of return that they can get. So they are, by definition, not going to be very interested in loans that are below market rate interest. And maybe for projects like community land trusts or, publicly owned housing stock that is very outside the kind of norm of, the privately owned home. So the challenge becomes, how do you seek out sources of financing? So this is one thing that has, because these efforts are haven't really moved forward yet. There hasn't been sort of those concrete discussions. San Francisco is convening a public working group to actually come up with a business plan, and hopefully that will be part of it. But I think that there are potentially sources of funding for the kind of mechanism I'm talking about. You would have to, a lot of what a public bank would do would be developing and cultivating and maintaining those relationships, and it would be understood that they are buying loans that do not conform to traditional standards, but they would generally be very safe loans because of the extremely low default rate. So what you'd be saying to them is, like, you're not going to get your normal, quote, normal rate of return, but you're getting a very safe investment over the long term. And so that I think is the problem. That, how do you find those sources? Of course, it would be great if the federal government would step in and provide that source, right? But that's not happening anytime in the immediate future. There was a second aspect to that question that I wanted to just. Beth, was there a second part?
Oh, yes. Sorry. The second part was that they found your suggestion of selling the loans to the pension funds very interesting. Could this be a way to keep the money in Philadelphia and support a mutual economy, use the bank as a safe public investment to ensure secure retirement for our public sector workers?
Yeah, exactly. And it's also a way, it's creating a mechanism where you're beginning to pull capital out of the global market and putting it back into Philadelphia. So it's not just retaining local money, but you're actually bringing that's why it's an important thing to think about, is when you sell the loan, you're bringing money that would otherwise go into some other investment, right? So you're bringing that money that's kind of out there in the world and bringing it back into Philadelphia, making more loans, selling those, bringing more money back. So if you can find the people who will buy those loans, let me just say, there's a lot of money out there. There is so much capital in the world, and if you could just tap a little bit of it, you could make a huge impact. You would begin to make a real dent in how things work.
Can I add that from the investor standpoint, there's a combination of looking for risk and return, and one of the things that we have found in looking at the situation is that the risks are somewhat misperceived, and as was demonstrated by that study by the Mortgage Bankers Association, that the kinds of projects that we're talking about are really marked up for systemic reasons in terms of the way the underwriting has to be done and so forth. We think that there can be innovations from the public bank that will reduce the cost of putting these projects together, be able to mitigate the perceived risks because of the misperception, and do that through blended rates of participating with other lenders, of being able to provide credit enhancement guarantees and other kinds of security, so that the investment to the impact investor would be very attractive for the kinds of projects that we're talking about.
Thanks so much. Okay, so that's the time for our Q&A. We're going to move now into a 5-minute break.
I'm going to turn it over to Councilmember Derek Green for the next portion of our event. Councilmember.
Thank you, Steve. We're going to have our next panel. We're starting now, and I hope my panelists will be coming on very shortly. And this is going to be an excellent opportunity to talk about what is happening in jurisdictions around the country and get a perspective on the public banking movement. You heard from Walt McRee earlier, country.
All right. Thank you very much, Derek. Appreciate it. I've got 7 minutes to tell you what's going on around the world and around the country, and a very dynamic movement. And frankly, and it is a movement, a vibrant movement for public banking across the country. I'll show you a map in just a moment of some of the actions that are going on. But I think it's important as context that we look at how public banking exists in the ecosphere of public finance globally. Public banking is not a new thing, as many of you may know. Been around for hundreds of years, frankly. Germany's had it for a couple of hundred years. Well established in dynamic economies across the world. China, Japan, Germany, Russia, India, Costa Rica, Ecuador, many others. In fact, the China revolution in infrastructure development is driven by the ability that it has to create its own credit, its public banking. So there are over 900 public banks around the globe, and they control about $50 trillion in assets. Now, here in North America, the largest public bank is actually in Canada. It's the Alberta Treasury branch, and it's many times larger than our famed Bank of North Dakota, which, of course, is the sterling U.S. model. We compare everything to the model of how the Bank of North Dakota has been so successfully exercising the principles of banking, of public interest banking, for 102 years. But there is another new United States public bank, and it is offshore a ways. It's the Territorial Bank of American Samoa. So we finally have a new bank in the 21st century, a new public bank, but it will not be the last, I promise you. The stateside, we have this a remarkable amount of movement, as I was saying, and here's just a quick look. I'm going to put this up for you for a while. This is the look at what's going on in the U.S., of course, and that is you'll see that there's a lot of action out west. That it is really about the organizations in these locations are very impressive. In stateside, we've got California activity all over the state. They really, actually, a couple of years ago, in 2019, California broke through and actually broke through legislatively and codified public banks. In other words, making it legally possible, legislatively possible for cities like Los Angeles, San Francisco, and as you see on the map, all of those cities are looking at creating public banks of their own. That codification, that law really did lay out the ways in which these banks would need to be developed, what they would be required to have and show, business plans, FDIC insurance, et cetera, et cetera. The details are, I can let David Jetty or Shaman from the West Coast, from California and San Francisco, tell you about that. But the motivations for creating these banks in California largely came from citizen uprising and annoyance with the fact that their tax money was going to the global banks that were investing heavily in fossil fuels and private prisons, payday lenders, and a variety of other social and community concerns that they really wanted to divorce themselves from. So that's kind of one of the things, and we, of course, see that as an impetus for other banks as well. As we move up the coast, the states of Oregon and Washington have been kind of in the public banking development sphere for the last 10 years. Oregon now looking again at a state bank. Washington State has also a new legislation on the table, which is quite interesting because they're looking at creating a cooperative styled institution that would allow voluntary participation by any municipality that wants to pool resources, pool capital, and then and create more cost-effective funding for infrastructure. So that's a very exciting prospect. And finally, after 10 years of trying, it looks like with a growing caucus of public bank supporters in the Senate, they may well be successful. Also out in the West, Colorado has been on board for a couple of years and trying to put that together. It's interesting to see the kinds of challenges that all of these organizations or all of these initiatives have. Challenges that come from bankers associations, from the momentum of the status quo, as I like to say, for legislators who don't want to really ruffle anything or don't want to try anything new. So, but New Mexico being one of those, started about 2014. That state now is going to have new legislation on the books at the start of next year. So, and that's very favorable. Now we have some state treasurers that are also coming along to help take the lead. What we've noticed now, as moving east here, you can see that most of the Northeast has had at one point or another some real strong efforts to create public banks. What we've noticed, though, and Philadelphia is fortunate to have, is that it really makes a difference to have an elected champion. So Councilmember Derek Green has been a champion for that. Across the river, Governor Phil Murphy has really led and made it part of his campaign and also part of his administration to create a state bank. He created a public bank implementation board, not just a study, but an implementation board. They've been on the job for about 18 months. The governor says it's harder than he thought, but at least it's still in the works. And there's some interesting ideas that are being put forward to do that. I have to speed up here. The Massachusetts now has a couple of legislative initiatives in both houses. Their focus is on meeting financial needs of cities and towns, affordable housing, supporting CDFIs, and also a very strong component of supporting racial justice. The Black Economic Council of Massachusetts and the Boston Ujima Project are both strong supporters. So we're hoping that Massachusetts will come along. We really expect with their momentum now that they'll be in a good place to do it. New York, you'll hear from Andy Morrison about state and city initiatives there. Here in Pennsylvania, I just want to give a shout out to the Pennsylvania Project, started by Mike Krause back in 2011, currently still continuing to try to bring the Pennsylvania legislature along. Mike Krause and the Pennsylvania Project started the Philadelphia Public Bank Initiative back in 2011. So now I have to stop apparently because of time, but I just want to point out that public banking also takes the shape on the federal level in a couple of important ways you should know about. The National Infrastructure Bank Coalition. It's going to replicate the model of the Reconstruction Finance Corporation of the 20th century. Very successful, something you guys need to check out. Also postal banking to make banking available at all levels of the community. And finally, the Public Banking Act, which is in Congress, again, to really look at reversioning the Federal Reserve and other steps that can be taken to support the creation of public banks around the country. I'm over time. Derek, it's yours.
And Walt, thank you for all of that great information. If I'm correct, I believe a lot of information can come from the Public Bank Institute website, which is great information. And you gave a great overview of what's happening around the country. And now we're going to get a little more detailed conversation for the next few moments. And getting a sense of what's happening in three specific jurisdictions. We'll hear from the chairman of the president of the San Francisco Board of Supervisors, Shaman Walton, and then we'll hear from David Jetty in Los Angeles. He's an organizer with the Los Angeles Public Banking Movement. And then we'll also hear from activist Andy Morrison from New York City Public Banking. So with that, let's go to President Walton to hear what's going on in San Francisco.
Well, first of all, thank you so much, Council Member Green, and just it's exciting to see this public banking summit take place. Really just glad to see what you all are doing in Philadelphia. And I'm just going to give a little bit of historical framework. I know you've heard a little bit about what we're doing here in San Francisco. We've been having a conversation about public banks for several years now. And my colleague, former colleague, I should say, on the Board of Education and eventually the Board of Supervisors, Sandra Fewer, when she got elected in 2016, began to do the work with the San Francisco Public Bank Coalition and really started focusing on the movement. I got elected in 2018 to serve on the Board of Supervisors, and Sandy and I had so many conversations while serving together on the Board of Education about a public bank, what it would mean for San Francisco, how excited we would be to make it happen. And so I immediately started also speaking with our state assembly member, David Chu. And after several conversations with Assemblymember Chu, we finally got him excited about pushing a bill at the state level that would allow us to be able to authorize our own public banks for municipalities in California. And so in 2019, he pushed through Assembly Bill 857, which allows for that authorization. So much excitement happened when that bill passed. We got hit with a pandemic. It slowed things down a little bit, but we still had just a groundswell of support. So many people pushing to make this happen. When my colleague, Supervisor Dean Preston, came on board and got elected to the Board of Supervisors, that's one of the things he immediately began to work on. So once we got the authorization from the state through Assemblymember Chu's bill, Supervisor Preston put together legislation to create our first San Francisco city-run bank, which was called the Reinvest in San Francisco Ordinance. That passed unanimously at the Board of Supervisors this past June. And it also allowed to set up a Reinvest in San Francisco working group that is doing the work now and looking at models of what a municipal finance corporation could look like here in San Francisco. And that working group is really just charged with looking at opportunities that exist, doing research and coming up with models that may work for us here in San Francisco. As we know from conversations with our city treasurer, if we set up a new bank, we need to have committed capital, which is going to take millions of dollars. We're going to need deposits in order to make loans. And one thing we can't do is use the treasurer's money for bank setup. So the city would have to provide its own seed money to set up our municipal bank here in San Francisco. There are a few models that are being talked about, models with the core purpose for lending and helping small businesses and people purchase homes, model to where we can take over and recreate how the city does our own investments and our own banking and have our own banks that we use for investment. But we really had a few goals for wanting to set up a public bank, and just a few that I'll list off: financing our own small businesses, being able to provide home loans for low income communities and people who would never have an opportunity to typically have a shot at home ownership. We want to eliminate predatory check cashing practices and make sure people are no longer targeted and suffering from expensive fees if they haven't been able to be a part of a typical bank. Provide savings and investment opportunities for all residents here in San Francisco. It'll also help us create some municipal jobs, which is also something that we get excited about. It'll give us the opportunity to control our own city investments and divest from harmful entities like fossil fuels, as was mentioned earlier. And so that, the movement and the fact that we're now at the point where we're actually going to have some models that are in place for us to look at, research, and come up with the resources for us to make that a reality is something that we're excited about here in the city. I know we had a previous conversation a couple of weeks ago with Councilman Green and some other folks about the public bank and what we're doing in San Francisco. And the question always comes up in terms of how much friction do we have and who opposed this push for us to come up and create our own public bank. And obviously our regular banking institutions had concerns. They really lobbied state legislators to try to stop the bill 857 because they wanted to continue to control banking here in the state of California. But we had so many people come together. We were able to beat back the banking lobby and be successful in getting the state bill passed. Of course, getting the bill passed here in San Francisco, which sets us up for success. And there's nothing wrong with a little healthy competition. Obviously, here in San Francisco, we want to be the first public bank in the state. I know Los Angeles is working real hard to do the same. And so we're going to continue to work with community, continue to work with the working group, and come up with a model that's going to work well for San Francisco so we can do all the things we need to help people get ahead here in the city and help people be successful and really look out for individuals who haven't typically had success with our larger banks, our larger private banks. So that's the work we're doing in San Francisco. Again, I appreciate having an opportunity to come here and talk about this. I do apologize as I have to leave in about 5 minutes, and I'll jump back on after a quick press conference. But I want to thank you so much for this platform, Councilman Green, and just for everybody for tuning in. Thank you.
Thank you, President Walton. Let's keep it on the West Coast and let's go to David Jetty and hear what's going on in LA.
All right. Thank you very much, Council Member, and thanks for the invitation. It's really fantastic summit, and congratulations to President Walton for the amazing progress that they're making up in San Francisco. The competition is well received down here. We're doing our best to found a bank in LA. I'll give you the quick rundown on the history of what we have done, and I'll try to get into some specifics because I know people kind of want to know the details here. So we started our public banking movement with divestment coming out of the Dakota Access Pipeline occupation. A lot of activists, especially indigenous rights activists and climate activists, were upset with the city's ongoing business with Wells Fargo and other financiers of that project. They teamed up with racial justice activists and housing and social finance activists who were already in the fight for public banks and divestment, and founded Divest LA, which succeeded in getting Wells Fargo disqualified from banking City of Los Angeles's money. But obviously, you have to go farther than just getting rid of one bank. The movement teamed up with the Public Banking Institute and other movements from around California and started the California Public Banking Alliance, which was the sponsor and one of the chief engines behind AB 857 that President Walton was talking about. That provided the guide rails for public banks and clarified what they are, but also set some pretty strict limitations on what they could do. COVID then happened, and the movement was mildly delayed. But after some work, and after the federal government came in to largely prop up municipal budgets, the story came back around to, well, what about public banks? And we were able to advance our effort here in LA to get an RFP on the make. We think that that's going to be voted on in the next week or so, which will start a 60-day countdown by which consultants will be selected to write a report and hold public hearings in LA on what an LA public bank will be. We're hoping that gets done in time for us to get some share of the second wave of ARPA funds. It's the American Rescue Plan Act, and one of the chief sources of where we'd like to capitalize an LA public bank. So what I'm showing here is a little bit about AB 857, which is the law that passed back in 2019. It requires a business plan or viability study for any bank that wants to get chartered, legislative or board approval, depending on the scale of the municipality that's sponsoring the bank, and approval of the DFPI, which is our banking regulator, formerly called the Department of Business Oversight. What we're hoping happens here in LA, because we have a lot of cities in a big giant metro area is that the city of LA itself would be a founding member, bring on other charter members like the city of Burbank, the city of Santa Monica, and contribute to a mutual benefit corporation, which is a nonprofit, non-shareholder corporation, which is one of the valid forms of a public bank here in under AB 857. These are all the things that that plan needs to include, and most of them are pretty straightforward. Nothing out of the ordinary. A fiscal analysis of all of the costs, its purpose, how much it's going to cost, and most importantly, an analysis of the cost of doing nothing, of the social and environmental impact of continuing business as usual. What needs to happen for us is that City Council is going to consider this plan. We know that the city charter is not going to need to be amended. This is important to us because I don't know if anyone remembers, back in 2018, we had to fight Measure B, which we lost, which was before AB 857 passed. Here in LA, we tried to amend the city charter to get a bank. AB 857 makes it so we don't have to. However, it does limit the number of banks that can be approved, and it does require us to go through a pretty rigorous process for the formation of a bank and a new government entity. The basic timeline of what we're hoping gets done once we get our plan finished is that once we get our plan started, is that about 5 months of community engagement, stakeholder meetings with labor, with housing groups, with community groups, and business groups to determine really the scope and intended mission of such a bank. Then the establishment of a mutual benefit corporation, and the investment of initial capital, and then the application to the regulator. After that, after a charter is issued, it's probably at least another 2 years before the Federal Reserve and FDIC will participate with such a bank and allow it to expand its services into other more traditional areas of banking. The banks are going to focus on a number of different projects, and I know we've already talked through a lot of these angles. But between all of the work that the city can do, we think that a lot of cities will benefit. And as an example, we'd like to show folks some of the scale that we'd like to achieve, where we think there will actually be an impact. That means a bank that's funded somewhere in the order of 100 to 300 million in equity capital in its first 3 years, growing to assets under 3 billion. This would make a difference, right? LA is a large economy. We're talking about something much larger than North Dakota. And in order to make a difference, we need to get that far. We try to model these things out for City Council, and we have mathematical basic business models in the background that we can share with folks. But these kinds of models don't matter if they're not based on the political realities and the desires of constituencies. So these are always in flux, and we adjust them as we speak to more people. Happy to answer more later, but I really appreciate the opportunity, and I thank and applaud everyone here for this really fantastic summit. Thanks.
And David, thank you for that overview. And if we now can go to Andy Morrison and hear what's going on in New York.
Hi, everyone. So first of all, thank you so much for inviting us to speak today. We're all really excited about the amazing work going on in Philadelphia and really all over the country. New Economy Project is an economic justice center in New York City. And over the last 26 years, we've challenged banks, debt collectors, and other companies that extract wealth from people and neighborhoods of color. At the same time, we advance campaigns to build new institutions that advance cooperative and community-led development as a matter of racial justice and economic democracy. In addition to public banking, we co-founded a coalition in 2012 called the New York City Community Land Initiative to advance community land trusts. And that work has been incredible. It's helped to build a really widespread and exciting movement for CLTs here in New York City. Now, several years ago, we also co-founded and continue to coordinate the Public Bank NYC Coalition, which is a really broad-based group of labor, worker cooperatives, CLTs, community and racial justice groups, and community development financial institutions. And we've advanced as a coalition a package of bills in the New York City Council called the People's Bank Act, which lays critical groundwork for a public bank in New York City. And then we've also advanced legislation at the state level called the New York Public Banking Act, which is kind of inspired by and hopes to build on California's landmark victory that's been discussed today. And then through our work in a coalition called the New York State Community Equity Agenda, we've helped to kind of support public banking movements that are growing all over New York, from Buffalo to Rochester and beyond. So it's a really exciting time here in New York. And I just want to share 3 key insights that have guided our coalition work, and a couple of examples of how those insights have manifested in our campaign work here in New York. So first and foremost, we believe as a coalition that this has to be an organizing effort that builds power to make public banking a reality. We believe that in order to have a bank that actually reflects the values of racial justice and real transformational change, there has to be a broad-based movement for public banking that can generate the requisite political will. And when we first got this coalition off the ground, we surveyed other efforts that had been, great efforts that had taken place around the country, but we often saw that they'd been stymied by feasibility studies and task forces, and often just legislation that had an enthusiastic champion in the legislature, and that was true in New York, but no broad-based support backing up the effort. And so that they would falter. So what we've tried to do is focus a lot of our work on community education and organizing. And in fact, even before we put forward legislation at all, we hosted borough-based town halls where we convened community groups and community members to come talk about what the needs are in historically redlined communities of color, so that we're not creating a bank in a vacuum, but we're creating an institution that would be responsive to the real needs that people are experiencing on a day-to-day basis. Similarly, another insight is that our campaign is not about public banking for its own sake, but really as a vehicle for advancing racial justice and cooperative development. And there's a really exciting movement for a cooperative economy here in New York City, initiatives that include worker cooperatives, community land trusts, and so much more. And a lot of these initiatives are not served by Wall Street banks. And so we've talked about public banking as a way to grow the cooperative economy. And I just want to emphasize that leaders within the Public Bank NYC and public banking movement across New York State come from those movements. So it's not just theoretical. People at the table who are designing the strategy, doing the work, and speaking out publicly about the need for public banking in New York are people who've run financial cooperatives, CDCUs, in historically redlined neighborhoods. They're worker owners who are experiencing firsthand how redlining makes it difficult for them to build wealth in their communities. They're community land trusts that are on the cusp of making huge strides forward and want to have an institution that can invest in them. And then the final insight is that we have framed our campaign as a divest and invest campaign. So in addition to addressing community needs through deep investment, as we've been discussing, public banking would also enable New York City to divest from banks that systematically harm people and communities of color through redlining and other exploitative and extractive activities. And so in New York City, commercial banks hold big Wall Street commercial banks hold the vast majority of public deposits. And so we've been able to kind of shine a light through direct action and other research and media work on the inherent contradiction in having our public dollars, which total in the many billions of dollars, on deposit with banks who then get to profit from our money as they exploit people, fail to serve our own communities, and invest in speculative real estate, slumlords, fossil fuels, and so much more. So just one example of how we've turned this into a political and organizing opportunity is we did a research project and held a direct action down on Wall Street where we showed how much the big banks had siphoned from communities in New York in the form of overdraft and other extractive fees. And so it totaled, just in New York City, $1.3 billion and more across the state of fees during the pandemic that the big banks extracted. And just to give you a sense real quick of how these things come together, because it sounds like I'm out of time, is that we had an event on Wall Street in front of the Charging Bull where we talked about how Wall Street banks were mauling communities through the pandemic. The worst offender was JP Morgan Chase, which is the bank that holds more New York City deposits than any other bank. And that we made the case in clear terms and had worker owners come and talk about their experiences and many others about we need to divest our money from Chase and other banks that continue to harm communities and invest it in a bank that will advance cooperative and community-led development as a matter of racial justice and economic democracy.
Andy, thank you for that overview of New York and President Walton, as well as David Jetty. We gave a really good perspective of what's happening in other cities. I want to give some time for questions and answers because there was a lot of questions in the chat feature. If we can get that information from those that provided questions, because this has been such an engaged conversation, I think we're going to skip our break so we can get right into the questions that people raised, and then we'll go continue with the rest of the program. And as we're teeing up the questions from the chat feature, I guess one of the points I want to raise is how, and this is for both David as well as Andy and President Walton, if you're able to come back, how do you get over the reluctance that someone say, well, a public bank is such a big undertaking. How can we possibly create a public bank? And then also to some of the naysayers who would say, you know, with all the challenges in public entities, how do we get people comfortable in having a new public institution? And David, President Walton, or Andy, feel free to jump in.
I'll speak to you real quick. We haven't gotten over that hurdle completely ourselves yet. We haven't actually founded a bank and gotten the capital committed, which is, I think, the key thing to overcome. One thing that we were able to do with our legislation was to have a sort of content agnostic bill, right? The ability to create a public bank under AB 857 doesn't make any requirements of what that bank does or who it serves or really even how it's governed. It just requires that those plans are written and that they're approved by a local legislature and constitutional, which would require certain separations of powers, but it doesn't require, for example, democratic input or focus on reversing inequality. Those things are things that we calculated that we would have better chance demanding at the local level where we have more direct influence. And we made effectively the bet that banks wouldn't be founded elsewhere, really get traction where they might actually further harm. In North Dakota, famously, their bank invests in fossil fuels and in the police protecting fossil fuel projects and things like that. So you're not guaranteed to have a good bank under AB 857, and that's part of why we have success. Is that you aim for doable things, but that sometimes means making compromises. I think that we do try to emphasize how similar what we're doing is to other government functions, and just insist that private parties are already doing this with very little effort, basically charging a phantom tax on every dollar the government spends in order to provide basic finance services, which the city could provide itself. And the more that you try to drill down to the reality of how really dependent finance is on government and not the other way around, you start to unravel that assumption in most people's minds. Obviously, there are people who are paid to think otherwise, and there's nothing you can do to convince them.
I'll just add, I can't underscore enough how much in our work we've been aided by the community development credit unions that are really leaders in the coalition. They help, do a lot of the lobby visits. The Lower East Side People's Federal Credit Union, Genesee Co-op Federal Credit Union in Rochester, and many others have been part of those meetings. So when these questions come up, we're able to have people who've run financial institutions talk about how you put a get a bank off the ground that can responsibly steward public funds. And we've also been supported by great pro bono counsel and just a lot of deep expertise within the coalition. So, but at the end of the day, I'll just go back to what I was getting at in my remarks is that I think a lot of these things are political in nature. So like we've experienced this a lot where it's like the moving the goalposts thing, where it's like you get, oh, well, what about this? And then you adequately respond. And then there's just like yet another thing that comes up. So I think that's a common thing that progressives face when we're advancing something transformational. And so we just have to keep building the broad-based support. So, and that's ultimately what it takes to overcome a lot of bad faith concerns that get raised.
From both of you, are there advocates and those that you thought would be more apprehensive to public banking that you've been surprised that have been much more enthusiastic and become part of the coalition to help move this initiative forward in LA and New York?
I mean, every once in a while we'll get some, well, like I remember the Rochester Chamber of Commerce reached out to us. They saw a news article and they were like, we love this idea. So yeah, it just speaks to, I think in many ways it's extremely radical what we're trying to do. In some ways it's just basic common sense. So I think it appeals to a lot of people in different ways. But that's one example. Certainly had others.
When I talk to Andy, you mentioned that CDFIs and local financial institutions are a big help. I mean, their interest and their interest in partnering with a potential public bank under terms that, from my judgment, seem good, right? Equitable and generative and not overly onerous. There's willingness to engage with even low yield, but also low risk debt and investment. The institutional investment community is seeking safe assets, even those with low coupon rates, because there's just not enough of them. The U.S. doesn't issue enough bonds, really, and investors are skittish. So if they could put their money into ESG assets or investments which carried a low chance of default, even at a low return rate, there's appetite for it. And it just takes courage on public entities to create those investments, and also a clarity of thought to know that they're going to offer them within a bounds that they're not going to go outside of, that they're going to resist political pressure from banks, from private capital to ratchet up those yields and put the choke on working people.
It's interesting, when you saw the map earlier that Walt McRee provided, you saw a lot of activity in California, and then you see activity on the East Coast. I think a lot of the activity in California is based on the fact that in California, you're fortunate enough to have enabling legislation at the state level that allows public banks to operate. So David, and then also as Andy, because in New York, you don't have that same dynamic. I know, although there are some bills that have been introduced, same thing in Pennsylvania, we don't have that enabling legislation. Can both of you give some perspectives on how you're navigating the fact that you have statewide entities that regulate banking, and how that impacts your local activity for a bank in LA or New York?
I can start. Yeah, we have the Department of Financial Services in New York that, through the New York Public Banking Act, it would be the entity that provides the special purpose charter to any locality that meets the requirements that are laid out in the bill. And so we've met with DFS and had really productive meetings. And I think it's been a good relationship overall, where we've had the opportunity to talk to them about our perspective and what their role would be, and hear their questions and concerns. And so that's been really good. I think one in a way advantage we have is that DFS is a very powerful regulator, and so it helps us to make the case that people say, oh, well, what about the responsibility, the stewarding public funds and so forth? It was like, well, we have DFS would be the overseer of these banks, just as it regulates and charters and oversees a number of banks that are chartered in New York State. And so it's been helpful to be able to say that. And that's how it's been going.
Yeah, I'll echo that and say that having enabling legislation gives local electeds and probably public staff confidence that there is a regulator that is preparing for this. After the law passed, a period of regulation writing commenced, and we were, at the California Public Banking Alliance able to inform that process and submit comment. And we think we had a positive impact on a couple of terms in the law, including jurisdiction. We wanted it to make sure that any public bank could operate anywhere in the state like any commercial chartered bank. We didn't want them to be limited to a geographic area, which would make them, not really viable. So we were able to engage with that. And then, of course, we can come back with that expertise and that state, permission and let local officials know, hey, this is how the regulator wants it. This is the path that we have to go down if we want this. It's a lot easier than kind of wandering out into the wilderness. And that's why we have AB 857. We were making progress in the cities, and we ran into city charters, into state law, questions of state law. And that was a big argument for why we needed the law in the first place.
Okay, well, I want to thank President Shaman Walton of the San Francisco Board of Supervisors, as well as David Jetty for his work in LA, Andy Morrison for the work you're doing in New York. I think you provide a lot of information about what you're doing in your jurisdictions, as well as guidance for other parts of the country that are looking to go into public banking. And I think they will be able to reach out to you and see the work you've done that can provide leadership so we can bring public banking to other jurisdictions. I'll now pass the microphone to Walt McRee.
Right. Thank you very much, Councilmember. Our next stage of conversation here is to take a look at the money. As you can imagine, it's going to take some money to start a bank. It's not nobody's surprise. And it'll take a lot of money. But how much and where you get it are the big questions. The answers vary, depending, of course, on a variety of circumstances and available sources. Beyond just startup and the operational overhead, the first order of bank funding is to acquire sufficient capitalization on which it will leverage its loan-making business. Now, where to look for that nest egg is something that our next presenter, Scott Baker, will help us with. Scott is a pioneering voice in the national public banking world about ways to capitalize these banks and how to calculate those needs. Scott takes a broad view of where they might find the available funds. He wrote a book called America is Not Broke. Scott shows where the civic wealth is stored and where citizens can help find it. He's the managing editor of the well-known online news channel Op-Ed News. He's a leading voice in the land taxation movement, and he is a senior advisor to the Public Banking Institute, has been supporting the Philadelphia Public Bank Initiative for much of the past 10 years. Scott, take it away.
Thank you, Walt. Okay, so there's going to be a lot here, so I'm not going to ask people to take notes. If you want to get the slideshow, that the URL is at the bottom, and I'll post that in the chat later. But I wanted to show some screen dumps from the actual reports, and in order to do that, I have to do a slideshow. So where do we get the money? Okay, so the place to look for that really is in the money that's already there, and you can find that in the Comprehensive Annual Financial Report. And every government entity in the country has one. So there are about 200,000 all online, totaling tens of trillions of dollars. Now, the difference between the Comprehensive Annual Financial Report and the budget is only for 1 year and includes the tax funding, whereas the CAFR is all city income, investment, taxation, and enterprise, plus the accumulated wealth over decades, basically forever. So it's the big difference between, for example, your household budget versus your entire statement of net worth. So you can see at the bottom, there's a couple of links where you can find these CAFRs online. And without further ado, I'm going to go to a couple of screen dumps. So when you look at these reports, what you want to do is to find the liquid assets, not the fixed capital, because roads and bridges won't do you any good in a bank. You want liquid assets that can be repurposed for investing into a bank, and I'll describe what that means in a minute. So I highlighted those in red in the report, and I added them up on the bottom. Now you have to add 3 zeros to everything because everything is in thousands here. So when you look at the total column, that next to last column, if you look at the total, that's actually $2 billion, not 2 million. And that's just on 5 categories, cash and cash equivalents, and deposits and investments and treasurer's account and that sort of thing. And then there are also what are called proprietary funds, which is another category of funds. And again, they have cash on deposit on hand and equity and treasurer's accounts and other assets, but I just use those 2 here. So you can get some more money from that. And then the big kahuna. The big kahuna is the pension fund, and it's big not only because it's so large, but also it tends to be all liquid assets. Occasionally they have real estate and more fixed assets, but basically it's all liquid. So that totals $6.6 billion. Remember, add the 3 zeros. And so that's the pension trust funds, and there's also some money in separate agencies. So somebody commented in the background, there's no money tree, but there is the pension fund, so that's close to it. And then there's 218 million in separate agency funds as well. Now, I know from the chat that there's a little confusion. I also know from the last 10 years of working on this, there's a little confusion between deposits and capital. So let me very briefly say what the difference is. Deposits are short-term, moving in and out to meet city, in this case, City of Philadelphia needs, and they do have to be larger than the loan portfolio. Now, the capital is there for the long term. That doesn't move in and out. That has to stay with the bank, and that can be, in this case, retained. Let's say you use the pension fund to use that to create the capital, and that can be retained with interest and repaid in less than 20 years. In other words, the return on investment to the pension fund would be in less than 20 years, and I know this because I modeled it. But it's only 1/9 the size of the loan portfolio, which is very good because then when you're repaying that capital, you don't have to repay something that's as big as the loan portfolio. You only have to repay something that's 1/9 the size, and therefore you can even pay off 5% a year and still leave enough money for the bank to make a profit and to grow and to make more loans over that period. So it's roughly 15 years, depending on how you set up the bank. But let's say you take out 5 to 10% of the pension fund and repurpose that and put it into the capital for the bank, and then you'll have enough to do that part. And then you use the money that comes in the general and proprietary funds as deposits, the way the Bank of North Dakota does with tax revenues, and then you'll have your deposits. Okay, so now why would you do that? Why would the pension fund give that up? Well, here's the truth, and this is kind of the awful truth. So the pension fund, this is a direct quote out of pages 109 through 110, seeks a return of not less than 7.55% over a full market cycle. But, also quoting, for the year ended just recently, the annual money-weighted rate of return on pension plan investments, net of pension plan investment expense, was only 1.89%. So this is a direct quote. I emphasize it here, but it's a direct quote. So they're not getting anything close to 7.55% really ever, because there's always fees and there's always expenses. And in fact, sometimes they make less money because of the fees, even while it looks like they're making a positive return. So what do they have in, their money invested in that's providing a return? Well, you can see one page here, which is also on page 110. This is all the categories that they invest in, includes private equity, international small caps, U.S. and global equity, high yield instruments, public REITs, I mean, a lot of things. And it's pretty hard to make the case that these are more or less risky, actually, than a well-run public bank would be. So let me go to the next page. So if you're still not convinced, so these are some of the foreign currencies that the pension fund currently owns, and pretty much covers the whole world. And you can judge for yourself if you think that those countries are more safe to invest in their currencies than investing in a local public bank in Philadelphia. They also invest in derivatives, and of course derivatives are scaled and leveraged and are worth on paper a lot more than the money that goes into them, but they're highly leveraged and very risky investments. So there's a whole slew of pages from 111 to 115 that describes the investment risks. Then again, I mentioned the fees. Okay, so the standard management fund management fees. First of all, there's over 100 investment managers paid by the pension board, so that's a lot of people to be paying. So you have to wonder whether it's worth it. So then there's broker fees or trading costs. Every time you make a purchase, of course, and anybody who has a stock portfolio knows this, you have to pay trading costs. So the city is no different. They also have to pay a broker. Then there's something called reporting fees. And when I did this a few years ago, it was to JP Morgan. That's a fee just to report on what the city owns. And so when they want to get the report, they actually have to get this report and pay for it. So there's other fees. If you have a hedge fund, which Philadelphia did and probably still does, you pay 2 and 22% for showing up and 20% of any profits. So right away, that's a big haircut. Then there's fund expenses. If you own mutual funds or additional expenses, then there's fees and cities pay for withdrawing from those hedge funds or from other funds too, maybe. So how bad is it really? So it's not just Philadelphia. Here in New York City, where I am, this comptroller, Scott Stringer, said in a 2015 report, when you do the math on what we pay Wall Street to actively manage our funds, it's shocking to realize that fees have not only wiped out any benefit to the funds, but have in fact cost taxpayers billions of dollars in lost returns. Now, this is over a 10-year period. So in other words, he's saying that the fees have gobbled up all the returns over a 10-year period. And that's pretty extraordinary when you think about it, that New York City hasn't made any money, even though it looked like on paper it did. All right, so what are you allowed to invest in? Again, I mentioned those categories before, but these are things you can invest in, alternative investments. They may be hedge funds, they may be private equity, and they could be real assets and real estate debt. There's a lot of opportunistic funds as well. So in addition, can a public bank be one of those alternative assets? And if you read this paragraph carefully, it almost looks like there's alternatives to the alternatives. So I think that's something that a good public campaign to force or at least convince the pension fund managers to invest a part of their fund in a public bank, which is counter-cyclical, meaning it will go up or perhaps when the rest of the assets go down, is a good investment. So now, remember, so we're not trying to change the fund uses. In other words, they're still going to pay the pensions, but we want to change the investments that the pension makes. So remember, the pensioners are only getting about 5% a year. The other 95% of the pension fund has to be rolled over every year and never paid to the pensioners. Otherwise, the pension would run out because they only get about 5%. I mean, they say 7%, but as we've seen, they don't. And the reason they actually get 5% is because they've got fees that come out of employees and employers that actually pay into the pension fund in addition to what the pension fund makes on the market. So these are ways that investments in a public bank could be more prudent and safe, counter-cyclical, as I mentioned, able to provide consistent returns, supportive of local community and job creation, as everybody has talked about before me, and fiduciarily responsible. So now I just want to mention that although tax revenues are used throughout the year, this usage is predictable and these revenues can form the deposit base for making loans. And that's how the Bank of North Dakota has worked since 1919. So the way to get this set up is, I'm almost out of time, is determine how much money the bank will need for a startup, calculate and project the results. And this I've done for Philadelphia. I'll show that on the next slide. Get all the operating ratios and then ascertain the assets from the CAFR, look to the pension fund resources, of course, get professional bankers involved to confirm all these assets. And as you all are, elect city champions and public allies. So this slideshow is up here, which I'll paste in the chat in a minute. And there's also a live presentation I did in Philadelphia when we were still doing things live. And that was from 2011, even though I updated it in 2013. Those are the links to that. And then I have a much deeper presentation called How to Start a Public Bank which actually comes with a 20-page manual where I model a public bank in Oakland and also New Hampshire. And therefore, you can see exactly how it's done on a spreadsheet over 8 years and see all the returns and all the operating ratios. And I'm using a basic banking model, and you can see how it would actually work. So that's it. Thank you very much.
That's great, Scott. Thank you so much. Really, a lot to consume, and it's good to be able to have access to it. Scott has looking at things from a different approach to how we would typically capitalize a bank. Philadelphia has taken a different approach to how it's going to create a public bank. And Councilmember Green and Stan Shapiro, who have been at the forefront of moving this in the last couple of years, are going to describe the legislative process that is underway in the city. Councilmember Green.
Actually, I'm going to start, Walt. So thanks.
Okay, great.
Yeah. So those who don't know, I'm a co-founder of the Coalition, co-founder of Philly Neighborhood Networks, and in my former life, I was chief staff attorney to Philly City Council. So I'm going to provide some details about the specific legislation that's now pending in council to establish a Philadelphia public bank. For reasons we don't need to get into right now, our bank is going to be established either as an authority or a subsidiary of an authority. PA authorities are granted expansive and virtually unlimited financing powers. Using this method avoids the need for special state legislation, which, given the nature of our legislature, is a good thing because we will never get any legislation through this particular legislature. But luckily, we do think we have authority from existing state law to create this bank. So the bill's most important feature, that is of the bill that's already been introduced, is the composition of its board. As Elizabeth Warren has famously said, personnel is policy. Our board will be made up of folks whose very self-definition involves service to communities that are starved for credit. Specifically, 6 of the 13 board members will come from a list of folks who are activists in one or more of the following areas: environmental justice, racial justice, low-income housing, public education, public health, co-op development, neighborhood-based small business development, gender justice, public transportation. 3 others would represent financial sectors whose lending policies mostly or entirely focus on local, mostly underserved Philadelphia communities, 1 from the credit union sector, 1 from the community bank sector, and 1 from the CDFI sector. A board like this, we think, can be counted on to implement the purposes of the authority as set forth in the bill. That's not going to be left to chance. These purposes are squarely targeted on community needs, namely renewable energy and energy efficiency enterprises and projects, low-income housing availability, co-op business development, enterprises paying family-sustaining wages, businesses creating new employment opportunities, transportation projects, other enterprises and activities fulfilling the needs of marginalized communities. In drafting the bill, we've been very aware that a major objection that the banker lobby will offer to our public bank is the specter of corruption. Only the private sector, you know, is corruption-free. That's what they'll tell you. So in any event, we think that in addition to assuring that the bank will serve those who really need help, the membership of the board will insulate it from the problem. There will simply not be any elected politicians who can hand out favors who are on the board, and the actual board membership will be dominated by individuals who have a track record of working in the community interest. But there are other specific provisions that will ensure that the bank is corruption-free. Among other things, the city controller will audit the bank's financials annually and audit its performance every other year. That doesn't take place with Wells Fargo or Citizens Bank right now. We don't know what they do with our money. The bank is also going to be required to seek oversight from state and federal regulators. Finally, all board members, employees, and contractors of the bank will be, or agents of the bank will be subject to the provisions of the city's strict ethics code, and their actions will be subject to review by the city's independent ethics board. Penalties for self-dealing will be swift and significant. So those are the most significant aspects of the legislation. There are legal issues that have been raised that may require some tweaking, but not in our view in any significant way. There is also the possibility that we may need regulatory approvals of various kinds before the bank can take city deposits, but we believe there will be other sources of funds available to it so that initial loans can move out of the bank within a relatively short time. If we get this bill passed, we are on the verge of a wholly new and different credit system in the city in the very near future, and we should all be excited about this possibility. So that's my presentation. I'm going to turn it back to Councilmember Green.
Thank you, Stan, for that overview. And I just want to give some additional perspective on this legislation and how we got to where we are currently. So this initial conversation started based on a conversation I had with Stan Shapiro, Peter Winslow, Susan Wendell, other members of the Philadelphia Public Banking Coalition, where we actually had hearings in City Council to start to open up the conversation, the thought of, could we have a public bank here in the city of Philadelphia? From there, we were able to work through the budget process to identify resources to bring in a national consultant, HRNA, to kind of give us an overview of what was happening in other jurisdictions and also make the case for public banking in Philadelphia. And we were able to do that. Coming out of that report done by HRNA, we also had some other additional studies that we did with students from Fells and as well as other former staffers from City Council. We used all that information to put together the blueprint that Stan just talked about. Now, unlike other jurisdictions like California, which have had enabling legislation at state level, we're dealing, as Stan stated, with a very challenging, and I'm being politically correct, challenging General Assembly in reference to trying to create a public bank in the city of Philadelphia. In addition, there are various interests that do not want to see a public bank in Philadelphia and have raised and will continue to raise some of the things that Stan just mentioned. So we had to be creative in reference to how do we create this type of entity in the city of Philadelphia now, but also give us the flexibility that we can expand going forward to do additional things. My perspective and background, having started as a banker with a regional bank called Meridian Bank, back in the early 90s when I came out of University of Virginia, and also knowing some of the challenges some of the other newer banks have had. We use the information from HRNA and the other research we did to draft the legislation that Stan talked about to create a municipal authority that will have the ability to do all the concepts we're talking about in reference to public banking. Now, we've had other municipal authorities that have been created. Philadelphia, for example, if you're familiar with the Philadelphia Energy Authority, they are the entity that have been doing the Solarize Philly initiative and helping to really grow solar opportunities here in the city of Philadelphia. And I've worked closely with Emily Shapiro and the Philadelphia Energy Authority, as well as I created a Philadelphia Health Authority as well. So we had a blueprint in reference to how we would start the legislation, but then we want to incorporate into this public bank authority concept the various things that Stan talked about. When you see San Francisco and they're talking about issues like affordable housing, LA is talking about affordable housing. And when you heard when Andy Morrison talked about cooperative work, those are some of the things that we wanted to have into the banking authority in reference to the leadership of this organization, that are people that had that type of background that could bring that type of focus to this entity. Because when I look at public banking, I'm looking at how do we address issues in areas that are not being addressed by traditional lending and by traditional institutions, and how can we support non-traditional entities that are doing great work in our city. So when you think about cooperatives who maybe have challenging be able to raise additional capital, how can a public bank help a cooperative? Or affordable housing or alternative energy opportunities. And that's where I see this public bank coming into that perspective. So since we've drafted the bill that Stan talked about that was introduced in January of 2021, we've also been providing additional resources to help us move through all the complex regulatory issues to move forward with the legislation. So we have engaged an outside law firm, Holland & Knight, who has been meeting with us on a weekly basis. We've also been meeting with the law department and the treasurer's office also on a weekly basis to work through all the myriad legal regulatory issues in order to have us move forward with a public bank. Now, there is a little bit of competition. I did see that in the chat feature, that if we're able to get this over the finish line, we would beat San Francisco and my friend President Walton, who's also trying to create their public bank. But I think we have a real opportunity getting through these issues, and as we go into the fall, to make those legislative changes that we need to make this entity operational. But we've also been looking at not just the legal and regulatory issues, but some of the capitalization issues that Scott Baker talked about. We met recently with City Controller Rebecca Reinhardt. In her role, she sits on a lot of those boards that deal with city resources. We'll be having a follow-up meeting with her in early October so we can continue to identify resources that could be available for a public bank. In addition, I'm sure many of you are familiar with the $1.4 billion that came to the city of Philadelphia through the American Rescue Plan, through the Biden administration. That also provides some opportunity for capitalization for the public bank. And then we have other ideas that could be possible for capitalization by issuing debt by way of the city to help form the capitalization for the public bank. So I think at this point, there are a lot of opportunities and perspectives to allow us to move forward with the legislation, to have this legislation passed soon, and then allow us to go into next year's budget cycle to really focus on, okay, now we've got the public bank passed into council. I had 11 co-sponsors for this legislation, and then move into the lobbying efforts to make sure we have the capitalization we need for the public bank. Now, through our conversations, both with the Philadelphia Public Bank Coalition and the Law Department, the Treasurer's Office, and Holland & Knight, we've also been talking with other organizations that are forming these similar but different entities at the same time. So I spoke about the Philadelphia Energy Authority. They have created a subsidiary called the Philadelphia Green Capital Corporation. That's a nonprofit that will actually launch in about 2 weeks. So they're looking about $1 to $2 million in operational dollars they'll need to get started. Also, the Philadelphia Housing Development Corporation just recently launched the Accelerator Fund. They also looked at a $1 to $2 million initial operating cost for that organization. So the fact that we are creating this public bank at the same time, similar but different entities are also being started at the same time that can help to address some of the issues in our city, I think provides us with a good roadmap to get the public bank started, and also provides some ability to not reinvent the wheel in reference to starting a new organization like the public bank. So I feel very strongly in reference to the passage of this bill, the fact that we have 11 co-sponsors, and also based on the fact that there's a lot of energy. And I think one of the benefits of this visiting summit, in addition to the town hall, is that there are probably other ideas that we have not thought about that can be part of the public bank concept. You heard a lot about providing access to credit for small businesses, minority businesses in the city of Philadelphia who need that access to credit in order to grow, but also about affordable housing development to help grow more affordable housing in the city of Philadelphia, which we know is a major issue in our city. Cooperatives. I know I'm a longtime member of Weaver's Way. Shout out to my friends in the Northwest. But we have other cooperatives in other parts of the city and also outside the city that are trying to grow. And there could be other ideas that could be a good opportunity for the public bank. So what I would say is, for those of you who've had an opportunity to participate in this summit, continue to send us questions, participate in our monthly Financing Philadelphia Future events where we bring different speakers in. Ask your member of council if you're in the city of Philadelphia, or if you're outside the city, ask your other elected officials what you are doing, or have you thought about a public bank? And for those who are outside of Philadelphia or outside of California, and you're not familiar with a public bank initiative being started in your jurisdiction, ask your elected official to at least start the process with a hearing, because that's how we got started here in Philadelphia. And I think that's what's going to help us move forward based on the grassroots work of all those who've been engaged to bring this idea to myself and to other elected officials. And that's how you can move public banking in your jurisdiction.
Thank you for that. All right, we are winding down now, but we're going to have some time for a Q&A for those last sessions. We talked about the actual legislation, and before that, we heard about where does the money come from. So, Beth, do you have any questions?
I do, Vanessa. So the first comes from Thomas. He asks, can there be a mandate in the charter requiring lending for accessible or affordable housing for households earning 50% or less of AMI, or green energy, food co-ops, things like that? I think we've talked about that a little, but I think it's a more specific question about, can that be mandated in the charter?
Those are good questions in reference to those type of perspectives. I think Thomas, that's probably Thomas Earls, a good friend of mine from Liberty Resources, as someone who is a strong proponent for accessible housing, especially with those that have physical and learning differences. That's a focus that we should have. I don't remember in the original bill if we said affordable housing, but I don't think we had a specific language regarding that. So that's something we can revisit as part of this entity. And the other thing is that we will have part of this initiative that actually does the lending, kind of like a loan committee that's going to be insulated from other perspectives of the organization. So these could be part of the underwriting guidelines for some of the loans and other products that come out of the public bank.
Thank you.
Okay, Beth, I'm going to go back to you for another question, but if I could add something to that statement, remember that this public bank is really going to be a support system for the lenders that already exist. And so, there are many community development financial institutions, CDFIs, that are already doing some type of lending to underserved or more challenged communities. There's actually specifically something called the Assistive Technology Loan Fund that already exists. So, and that works with many disabled people to access to all sorts of technology and other resources, including housing.
And Vanessa, if I could just touch on that real quickly, because I know there's been some concern that I've heard from friends in the CDFI community. Well, if we bring a new entity, is that going to impact other community development financial institutions? And so the role I see the public bank is going to help augment the work that CDFIs. Could a CDFI borrow from the public bank? Could the public bank provide a credit enhancement or letter of credit to a CDFI so they can borrow even more money from those type of investors to help grow CDFIs, or work in partnership? So I don't really see the public bank in competition with a CDFI or the credit union, or even some of our other smaller community-based banks. I think that's a misnomer, that people are concerned that this public bank is going to take resources from existing community development financial institutions. And to me, the goal is to have augment and support the work and work in partnership with them.
Absolutely. Thank you. Next question.
Okay. Most recently, Domita asked this, but a number of people have asked in various forms. How do we ensure that the board members of the bank are not political appointees or nominated as personal favor of the nominating committee or group?
That's an excellent
point. Let me take that. Can I, if I could take that?
Let's stand and I'll follow up. You're good.
Because I've got the legislation in front of me and had a hand in drafting it. So, that was in our minds when we drafted it, and there is no 100% guarantee. I think that won't happen. All suggestions are welcome, but personnel is policy, as we've said, and we've guaranteed that the members of the board will be nominated from groups that kind of guarantee that they'll have a public interest. 6 have got to be representative of the groups that I mentioned actually in my presentation, but those nominees have to have been recommended to council by organizations concerned with the issues that the public bank has got to be focused on. So the mayor will not be able to present nominees out, based on his or her own connections, but we'll have to wait for nominees that are sent by active community organizations that have been involved with these issues for a long period of time. We think that that will provide some reason to believe that the board is actually going to be responsive to all of us rather than to special interests. But the bottom line is we are going to have to be vigilant all through this process. All of us are going to have to be vigilant all through this process to be sure that the entity does not get co-opted. I think there are good structures in the legislation to help prevent that, but the only sure guarantee of it is an active movement that monitors this and intervenes in this every step of the way.
And just to follow up on Stan, and Stan, thank you for that, because we spent quite a bit of time in the drafting process to make sure that individuals that would be nominated have that requisite background and expertise and years of expertise in those areas that align with the goals and mission of this public bank initiative. In addition, we've had conversations with the ethics board in reference to how we can adopt part of the ethics board oversight into the legislation so that we can voluntarily adopt a regulation or perspective in the legislation that gives the ethics board oversight of this entity. And then the other point I'll say is that we're also trying to have the public bank as a community development financial institution in itself. In order to meet the CDFI test, and there's an 8-step process, you cannot be controlled by the public sector or the government. So you have to demonstrate in your application you're not government controlled. So that's another aspect. So as we're going through the amendments for the legislation and for this entity, we're going to be very specific to make sure that we meet the CDFI test. And we've been working with the Accelerator Fund from PHDC, which also is going through that process as we speak. So that provides another check to make sure that this entity is not government controlled in order to become a community development financial institution, which will help us do an even better job as a public bank.
Great, Beth. I think we can have one more question.
Okay. 80 asks, will the public bank have a lender of last resort in case of financial crisis such as the Federal Reserve?
Well, we'll be seeking privileges at the Federal Reserve. It's going to be a long and winding route, but that is absolutely an objective that we all have for this institution.
And we have had conversations with the Federal Reserve as well as the U.S. Treasury. One of the challenges that with the Federal Reserve, we have to be a depositor in the Federal Reserve. So we've actually got to grow this entity, but we'll continue to have those conversations. And we're trying to draft the legislation to be as broad as possible. So even though we started initially in step 1, we have the ability through steps 2, 3, 4, and 5 to do even more things going forward.
All right, that was fast. Beth, one more question. Let's get one more in.
Okay. Ariel asks, how will we ensure that the Chamber of Commerce or big banks don't water down the current bill language?
Okay. Say that once again, Beth.
How will we ensure that the Chamber of Commerce or big banks don't water down the current bill language if we're satisfied with how it is now, which I think.
Well, they would have to somehow maybe kidnap me and bring a Manchurian council member, Derek Green. I guess because the difference I think is that I've worked in banking. So some of the pushbacks that they'll try to raise, I can say, well, I know your industry. So you're not going to be able to say, well, you can't do this or you can't do that. And I can say, well, you don't provide letters of credit. Your whole focus is on risk and making a return on deposits that people put into your bank. You give them a small rate of return, but you get a bigger rate of return on the loans that you do. That's your model. You bring in money and you lend it out. You give out less in deposit returns, but you bring in more in reference to the interest that you earned. That's your model. A public entity has a different risk profile. We're not trying to make profits. No, at best we'll break even. But the goal is to have an opportunity to provide resources for those entities, those industries like alternative energy, like affordable housing, like cooperatives, like some minority businesses that traditionally banks have not provided. So that's my response back to them. And the reason why there's a public bank, because you chose not to be in this space. You could have been in this space, but you had a profit motive that led to all the things we've been talking about prior to getting onto this panel.
All right, I'm going to do a couple of next steps that are really important because what we've been talking about all day is a pretty major change. And we need your help to do this. So prepare to make your voice heard. You will be getting an outreach toolkit via email from the coalition. As you heard, the legislation is now in the process of some amendments and changes. So you'll get that second version, essentially, of the legislation when that's done. We're not sure when that will be. Just stay tuned. And what we're asking you to do when we send you that toolkit is to communicate to push the legislation forward. All right. And so you might be communicating with the mayor, with city council people. And as was briefly mentioned, at the state level, there may be some legislative barriers that we may need to get across. You may need to communicate with some of your Pennsylvania legislators. All right, so stay tuned for that. Also, and you can start this now, is recruiting 3 friends or family members or neighbors to help join you. The more we magnify the voices, the better. So in that toolkit, we'll get information about how to communicate effectively with those officials, and you'll get templates for social media and letters or emails. All right, thank you so much from this host for joining us. This was absolutely fantastic. And I'll now turn it over to Steve.
Awesome. Thank you so much, Vanessa. Yeah, thank you everyone for showing up and sticking with us for a few hours now. We hope, during these presentations today, you learned something new, you got inspired by our vision of what a public bank can do. I hope this event is your first step towards advocating together with us for a public bank here in Philadelphia. I think we had like 180 people on the call at our max. So, we're not alone, but if you get your family members, if you get your neighbors, if you get everyone involved and included, we could really show a powerful force. We've had great feedback from the survey. We want to double that. So we're going to stay on this call for a couple more minutes to give folks who haven't had a chance to complete the survey to complete the survey. Sorry, my 4 o'clock alarm, but the event over. So join the coalition, join any of the member organizations who sponsored this event today, and let's get a public bank accountable, not to shareholders, right? To people like us on this call, to the people in the city, a bank that would actually invest in our local communities here in Philly, and communities that Wall Street has too often, you heard from the speakers today, locked us out or completely left us behind. I want to thank all of the co-sponsors. Councilmember Derek Green mentioned them earlier. Philadelphia Neighborhood Networks, Our City, Our School, the Pennsylvania Working Families Party, Sustainable Business Network, Philadelphia Area Cooperative Alliance, Disabled in Action, Power Acre, Philly Revenue Project, the Public Banking Institute, Smart Collaboration, Reclaim Philadelphia, Liberty Resources Corporation. Thank you all for joining us.